Good morning, everyone, and welcome to InvestorExpos show on June 11th. My name is Anna, and I'll be your host today. We are having a great lineup of 4 speakers for you: Joshua Martinez, Norman Hallett, Hugh Grossman, and Ray Burchett. This session will be recorded and sent to your email. Please take a look at your GoToWebinar control panel. Into the questions box, you will be able to ask any questions you want during the speaker's presentation. So I would like to begin and bring to the show our first guest, Joshua Martinez.
Yeah, so we're going to talk about a strategy called Destination Trader. And Destination Trader is a pattern recognition technology that can help us forward project what the market may do next. And it works up to 9 out of 10 times. It's brought a lot of consistency with the overall results to where when we turn on our computers, we know exactly the direction to trade, how to enter into the market, where to exit for profit, as well as to minimize risk. But the most exciting thing is we're able to automate the entire experience. So the person who's really busy, being able to make an extra $3,000 to $4,000 a month is becoming very tangible with a relatively small investment.
Sound exciting. The screen is yours. I will get back to you in 45 minutes.
All right, perfect. Thank you so much. Okay, everybody. I just want to make sure that you can hear my voice and the screen has just changed. If you could, go ahead and type in a yes into the question section box, just confirming that you can see sound check. You should see a little icon on your GoToWebinar software. It's a little orange button with an arrow on it. If you just click on that, down at the bottom it says enter a question for staff. If you can just type in a yes in that little box, and that will allow me to see if everything is working properly. Okay, perfect. Hey, thank you, David. Thank you, Peter. Thank you, Pierre. Appreciate the confirmation. So what we're going to be talking about today is the Destination Trader. And one of the things I want to do is start out with what's called the end goal in mind. And the end goal in mind for me is what's referred to as results. And so we teach the Destination Trader to people from all around the world. It's relatively straightforward. We're going to give you a demonstration today in the live market. But what I do is after the demonstration, we'll utilize it inside the live market environment, and we'll outline the trading opportunities. We'll say, hey, here's where we enter in, here's where we place our stops, here's where we place our limits. And then we ask people, how are you doing? What was your results? What was the overall potential performance? And this is what they said. So we have the individuals stating, and this person states, was able to make 85 ticks. This person was able to make $2,000 US in a single day. This person was able to make $700 in a single day. This person was able to make $400. This person reports making $325. $245 with micros. This person made $600, $400, $300. This person made $7,708 US in 2 days. We consider that more of a home run. This person reports $399, $673, $700 scalping, $1,240, $600 yesterday, $300 today. This person reports making $1,500 in a single day, and then another person reports making $4,700 US in a single week. $3,000 US in a single day, then asking what's the next best destination. This person reports making $500 US within 2 days, $100, $375, $400, $530, $337, $400, $550. Now, why am I sharing with you results? Well, first things first, I need everyone to understand that for me, the end goal in mind is performance. And if you're going to learn a strategy, if you're going to understand a strategy, I think it's important that you see what other people are making from it. And so we're not going to talk about an entry strategy that is going to require a $100,000 investment. We're not going to talk about, needing $20,000 in your account either. We're going to talk about a moderate few $1,000s to get started. You can absolutely invest more if you want, but we're looking for an extra $3,000 to $4,000 a month. But most importantly, we're looking for it to be consistent, reliable, and almost dependable. So before I go any further, let me just ask the simple question. Type in a me, M-E, into the question section box if you would be pretty happy making an extra $3,000 to $4,000 a month. let's say last month you made $4,000, this month you make $4,000, next month you make $3,000, and you're just getting started. Alexander says me, Peter says me, Terry says me, Active Trader says me. Okay, so today that's what we're going to be discussing, and we're going to be sharing with you the step-by-step process of how we do it here at Traders Agency and how we educate individuals. Now, in front of you is the risk disclaimer. It just means there is risk involved. You should never invest money that you cannot afford to lose. Always keep risk management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. What that basically means is that what I'm going to share with you is research. What you do with that information is completely up to you. Now, you're going to see a little section here that says hypothetical or simulated results. What that means is we back test our strategy. So we take our entry and exit strategy or our approach and we run it across past information. Basically, we ask the question, which is, hey, if we were to trade this way over a 12-month period, what would we have been able to do? And we're going to show you results of what that looks like. Now, I do not want you to be confused and think it's real money results. It's referred to as back tested results or simulated results or hypothetical results. It's important that you do back test your strategy because you're able to make improvements to your strategy and find the weakness of the strategy before you use live money. So it's one of the most important things that you can really do. Now, what we're going to be talking about today is on the futures market, and we like to look at symbols on the futures market that you can also trade an ETF with, and the ETF is usually optionable. So whether you trade options, whether you trade ETFs, whether you trade stocks, or whether you trade futures, or whether you're brand new, we're going to share with you a process that you can look to take advantage of. But the demonstration that we're going to be using today is on the futures market. Now, I understand some of you may be brand new and you never traded before, and that's okay. I just understand this. To kind of take the intimidation out of trading, outside of risk management, direction is the most important thing to trading. But the good news is you have pretty strong baselines of being right or wrong. What I mean by that is the market can only do two things. It can only go up and it can only go down. So if you were to put a blindfold on, close your eyes, flip a coin, and guess the direction, you have a 50% chance of being right or wrong. All we're going to be utilizing today, what I'm going to be sharing with you today, is what's called a pattern recognition technology called the Destination Trader that can help us be right more than half the time. Do me a favor, type in a yes, why yes, into the question section box. If you understand, I'm going to share with you a technology that can help you forward project what the market may do next that's right more than half the time. And that's really what we're going to be doing. And the reason why that's important is because if you can win more than half your trades, as long as you have good risk management, essentially you become what's called production driven. And production driven just means the more trades you place, the more money in theory you can make. And so here is some back tested results of the strategy that I'm going to be teaching you today. Here's the S&P 500 trading E-mini futures. It's averaged $13,678 US a month over a 12-month period. This is the NASDAQ 100 E-mini contract. The average $13,325.99 a month over a 12-month period. This is the Euro futures. This has averaged $3,140 US.35 a month over a 12-month period. It doesn't win all the trades, but it does and has been proven through the back test to make money over time. Here's a student who's utilizing the strategy now. He says, I've been trading stocks and stock options for over 30 years, and below is at least triple the profit I have ever made in the same time period. So this person reports making over $12,083.50 within a single calendar month period. This person says, today I made $10,000 US this week, and which is a huge milestone for me. This person reports making $2,000 in a single day, $700 in a single day, $400, $325, $600, $400, and we can literally go page over page over page of just student testimonials. $4,700 in a week, $1,500 in a day, $3,000 US in a day, $500 US in 2 days. These are trading one contract at a time, Jeff. And what we're going to be demonstrating today is what's going to be on micro contracts. And the reason why we're going to share with you on micro contracts, because we're going to share with you how you can still look to generate $3,000 to $4,000 a month realistically, which is a couple micros, which are the smallest investment sizes possible. Now, my name is Joshua Martinez, and I'm a 10-plus year trading veteran. Personally, I've taken a $500 initial deposit investment and generated over $39,000 of profit from it. I'm a senior course instructor at Traders Agency. I'm a published author, international speaker, professional analyst, and I've trained tens of thousands of people from all around the world. I am a full-time trader myself. I do trade with my own money. I do lose my own money, and I do try to make money with my own money. And what I do is I share my research of what's working for me and what's not working for me to those who want to learn. So I'll write articles and I'll post trade ideas, and I'll say, this is what I'm looking at, and this is what's been working, this is what has not been working. Some of my information articles have been published and featured at Your Trading Edge, FX Trader Magazine, Equities.com, Trading Planet, as well as Trading Pub. So let's go ahead and jump into the live market. I have about 30 minutes left, and I'm going to use majority of all that just to kind of demonstrate the strategy. Okay, so in trading, how this works that we have discovered is that when you turn on your computer, you have to make a simple decision, which is up or down. You have to be able to say the market's going to go up or the market's going to go down. If the market's going to go up, we look to buy. And if we're right, we make money. If we're wrong, we lose money. And if we believe the market's going to go down, we look to sell. We just make a financial bet that the market will fall. And if we're right, we make money. And if we're wrong, we lose money. So I'm going to share with you what's called and if you have TradingView, we can easily share this with you. Or if you have NinjaTrader 8, we can share it with you as well. It's called the Destination Trader. And essentially what you see is you see these purple lines. Do me a favor, type in a yes if you can see these purple lines on your chart. Just want to make sure that the screen has updated. Okay. Thank you, Jeff. Thank you, Peter. Thank you, Caroline. Thank you, Alexander. Thank you, Active Trader. Okay. Thank you, John. Now, what are these? Well, this is what's called Destination Trader. So specifically, what is Destination Trader? Well, specifically, here's what it is. It takes 120 minutes of time. And then what it does is it runs a formula. So we're going to say number 2. It takes a high price, a low price, and the close price. It runs a formula. It places dots on the chart, and then there's up to a 9 out of 10 chance that the market will actually go towards those dots. So every 2 hours, we're going to receive a price point. And the pattern basically is going to say, based upon the formula, based upon the data, this is where the market should go. Let me walk you through some scenarios, so this way you thoroughly understand the process, okay? So this is what's called the E-mini Russell 2000. This is a symbol. It's a very popular symbol. And here at 2 o'clock, you notice that we received a purple dot. Now, I'm going to place a blue line just to highlight the purple dot. But basically what this is saying is, so just imagine this for a moment. Imagine that you turn on your computer and your job is to say up or down. That's it. If you're utilizing the Destination Trader, you're going to be able to say, hey, there is an unfulfilled destination above the market. There's up to a 9 out of 10 chance that price will increase. And so all I want you to do is watch to see what the market does and if price actually increases. Do me a favor, type in a yes if you can visually see that the candlesticks or price itself increased and actually touched or crossed over the destination, okay? So that is now considered fulfilled, which basically means we no longer use the destination because the prediction was fulfilled. Now what we have to do is we have to wait 2 hours or the end of the 2 hours, and then we'll receive another one. So this is now 4 o'clock, and you have a new dot, which is at a different price than the previous destination. I'm going to put a blue line just to highlight it, but basically there's a 9 out of 10 chance, or up to 9 out of 10 chance the market will increase and touch the blue dot. So bingo, the market increased. That one's considered fulfilled. And now you just have to wait for the next 2 hours, and we'll see. We'll see what ends up taking place. Here's another one. Here's now 6 o'clock. Basically, you turn on your computer, you say, hey, where's the market going to go next? Get an up to 9 out of 10 chance the market will fall and touch. Bingo, that one's fulfilled as well. So you can begin to see how this works. Every 2 hours, you receive a price point. They're fixed price points, so they never change. They do not repaint whatsoever. And that's very, very important, by the way. Here we have another one. It's 8 o'clock, and we're basically going to say, hey, price should increase and touch the destination. Let's see what ends up happening. Okay. And let's see, does market ever come back up? Not as of yet. This is now considered unfulfilled. Essentially means we're still going to expect that that price will increase and rally. Now, one of the things that I have learned in trading is when you say statements or you hear of statements of something's working 9 out of 10 times, for me, it's like too good to be true. And one of the things which I want to do is, number one, share with you that that's a true statement. And the only way that I know how to share that with you is by showing you the strike rate. So what is a strike rate? A strike rate just basically means this. If you're going to use a pattern to help you predict what the market's going to do, whether it's Fibonacci's, trend lines, candlesticks, systems, whatever, you need to understand that a strategy is built around a pattern, something that happens inside the market over and over and over again. So if you're going to build a strategy around a pattern, you got to know how often does that pattern actually work. Do me a favor, type in a me, M-E, into the question section box if you would like for me to share with you what the pattern strike rate is. Essentially, we're going to tell you percentage-wise how often does destinations actually work and how often do they really not work. Davis says, I'm not clear what you mean by up to 9 out of 10. Do you mean specifically 9 out of 10? Yes. So I'm going to give you the specifics right now, David. So what I'm going to do is I'm going to count the destinations on the chart, and we're just going to count how many have fulfilled and how many have not. I'm going to try to give you a strong baseline. So I put in as many as I possibly can. This will literally take about 1 minute to do, so let's just go ahead and get it done. I'm just going to count the destinations. We're going to find out how many times did it work versus how many times did it not work. So here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57. So there are 157 destinations on your chart. And what we want to find out is how many did it not work? How many times did it not work? And so all we're going to do to answer that question is we're just simply going to count. We're going to show you when it did not work. We're just going to find the destinations where price never equaled. So right here, it did not work. So I'm going to put a blue line where price never came down and never fulfilled it. Now, if price comes down and equals the destination, that will be considered fulfilled. So that one was fulfilled, okay? All of these have been fulfilled. Let's go ahead and keep going. So all of these have been fulfilled. This one has not been fulfilled. Okay, this one has not been fulfilled. But price came down and equaled this one, and then also equaled this one, okay? Price equaled that one, so that one's been fulfilled. All of these have been fulfilled. That one was fulfilled. So it did not work here. It did not work here. And it did not work here. So out of 157 destinations, 154 worked. So 154 were actually hit. Only 3 times did it not work. So that's 154 divided by 157. That's a 98.08, 98.08% strike rate. Now, what does that mean? That doesn't mean the win ratio. It just means that out of the last 157 destinations, 154 worked. Another way of explaining it is to say, hypothetically speaking, if you said to yourself, all I am going to do is trade towards the destination. That's it. When the market gives me a price point every 2 hours, my plan of action is just to trade towards it. If these destinations were individual, which means they're individual trades, type in a yes, why yes, into the question section box if you like the idea of winning 154 out of your last 157 trades, because that's kind of what we're talking about here. So Jeff says yes, Peter says yes, Caroline says yes. Okay. So David, to be specific, of the last 157 destinations, the pattern has worked 98.08% of the time. Okay, now here is Tom says, what was the time period? The destination that we were discussing started from the 26th, so we're talking about 1, 2, 3 weeks. You know, a 3-week time period. This is not a buy and hold, and this is not a sell and hold technique. It doesn't mean that you are trading, you know, every 2 hours. That's not what this does mean. It just means that the pattern itself is working. And we're going to share with you how to take advantage of it. But before we go any further, I just want to ask the question if it seems like a logical plan to say, hey, we have a pattern recognition technology, and it's working 98.8% of the time. Type in a yes, why yes, if it logically makes sense that we should probably build an entry strategy around this pattern. To say, hey, we should probably actually trade towards this destination. Okay, good. Now, what you don't want to do is, number one, I don't want to set any false expectations. I don't expect to win 98% of my trades. What I'm trying to do, and what I teach, is to have a 70-30 split. What that means is, for every 10 trades that we place, we're going to try to win 7 of them, and we're going to expect to lose 3 of them. Now, we don't want to lose, we don't like to lose, but losing is a part of trading. And really what losing does, if you do it strategic, is it can lower your drawdown, which it means that you're willing to admit, hey, you're probably wrong in the direction, and to prevent losing more money, you're going to close out with a predefined loss. That is very responsible when it comes to trading, and so we treat this like a business, and just like a company, you don't get to keep all the money that you bring in because you have what's called overhead. You got to pay your employees, you got to pay your cost of goods, you got to pay the mortgage, you got to pay the rent, the utilities, etc. In trading, your losing percentage is essentially your overhead. Do me a favor, type into yes if you understand that in trading, you can, if you run a business, you understand that there's overhead. Your overhead in trading is losing. And so instead of saying, oh, I had a losing day, you can say, oh, I had an overhead day, right? And so your strategy is just a different way of viewing it. It really helps the mind. So we try to run a 70-30 split where 30% of our trades are overhead, which basically means we expect to lose 30% of our trades. And it's a healthy mix. But What I'm going to teach you right now is what's called a diversification entry strategy. And a diversification entry strategy, in my opinion, is the best way to enter into the market to give you the highest winning percent chance of making the most amount of money. Let me explain to you why. Here's what most people will do when they first learn how to trade. They will go on YouTube, they'll watch some lessons, they'll go watch some videos, they attend presentations like this. Maybe they spend a couple bucks and they get an ebook or something, or video tutorials. But essentially what you begin to realize, what most new people do, is they realize, hey, when I turn on my computer, I have to be able to identify a trend. You have to make the decision if we're going up or if we're going down. And then maybe you use hand-drawn trend lines, maybe you use a moving average, some sort of indicator that lets you know momentum, if we're going up or going down. And in this scenario, we can see that the market's in an uptrend, and we're making higher highs and higher lows. And essentially what we're looking to do is we're trying to find a low price higher than this low. Type in a yes if this somewhat makes logical sense. We're in an uptrend, we're making higher highs and higher lows. We're trying to find a low higher than this low, so we're trying to buy. Well, what most new people do is they will enter into the market buying, and this is part of the problem, okay? I call this the old way of trading. And some people will say, you know what, I want to buy the market for $500. And all they do is they enter into the market with a $500 investment. And then they go, well, I don't want to lose the whole $500. So what I'm going to do is I'm going to have what's called a stop, which is an automatic exit for loss. But they put their stop very, very close to their entry. So if the market just doesn't go their way right then, they're going to lose some money. And then they say, well, I learned that I'm supposed to have a reward or a limit that's larger than my risk. And so they justify the tight stop by having a larger reward. And most of the time that what we've seen is that new traders will say this. They go, I enter into the market went against me, stopped me out, I lose money, and then a couple hours later or a few days later, the market goes my original direction. Type in a me, M-E, into the question section box if you're having this problem. You enter into the market goes against you, you get a little bit nervous, you close out with a loss, or you have a tight stop and you close out with a loss, only to watch the market go your original direction. Yeah, so there's a couple things, right? You're not alone. That's Jeff, that's Member, that's Peter, that's Caroline, right? So if you're an active trader, this is a normal struggle. It's number one, two things. Number one, you're a great analyst. All of your research, all of your effort on predicting what the market's doing is actually working because you're saying, hey, the markets are going to go up, and it actually goes up. So that's number one. Number two, you just have a bad entry strategy. And if you don't fix this entry strategy, two things traditionally happens that we've seen. Number one, you'll quit trading because nobody wants to be punished for being right. If you can predict the market and you're losing money predicting the market, then why would you continue? So if you don't fix it, you'll probably quit. The second thing is if you don't quit and you don't fix the problem, you'll run out of money. And we call that dying by 1,000 paper cuts. You're being punished for being right and you consistently lose money. A way to fix it, which you don't need me to fix it, you can do it on your own, but a way to fix it is a very straightforward process. What you can do is, I call this the new way. It's not even really the new way. I just call it the new way because it's new to new traders. The new way of trading is, instead of being an all or nothing trader, which basically means you put all your eggs in one basket, what you do is you split up your investment. So instead of investing $500, you say, you know what, I'm going to invest $100 up to 5 times. And you're going to diversify your entry. And so essentially what you do is you say, okay, I think the market's going to go up, so I'm going to buy it for $100. Not 500, 100. If it goes against me, I'll buy it for another 100, and then another 100, and then I'll finally have my stop. You're not going to invest more money. You're just going to split your investment up, giving you the opportunity to make the most amount of money. Now, traditionally, this is how this will work. So you buy the market goes against you like you're having the problem now. Instead of losing, you effectively sized in appropriately, market goes your way, you make money. So what this does is it gives you the opportunity to make money when you're right. Now you may say, well, what if it goes completely against me? Well, that does happen. If it comes all the way down, you lose on all your positions, but which is much less than what you're currently doing now. But if you do this well enough, this is what usually happens. When the market goes up, it moves in waves, makes higher highs and higher lows. And the old saying is what goes down must come up and what comes up must come down. So the market has a very hard time moving in a straight line. And eventually a low will form and the market will pull back. And if you do this well enough, this is usually what happens. Your first position loses. Your second position breaks even or makes a little bit of money. And your third position makes the most amount of money. So therefore, you can exit all three positions either at break even or making a little bit of money or losing a little bit of money. Another way of explaining this is the following. Type in a ME, M-E, into the question section box if you like the idea of using an entry strategy that is specifically designed to help you make money when you're right and to also give you an opportunity to make money even if you're wrong. Yeah, Jeff says me, Peter says me, Caroline says me, Tom says me. Now, I want you to think about this for a moment, okay? What if, just thinking out loud, what if you used a pattern recognition technology that can help you forward predict what the market could do next? And it was working 98.8% of the time. What if you used destinations and you said, I'm going to trade towards the destination trader? And it's worked 154 out of the last 157 times. And what if you coupled that with a diversification entry strategy? So you used a diversification entry strategy, which is designed to help you make money when you're right, and designed to help you give you a chance to make money even if you're wrong. And then you use that to enter in, and then you used an exit strategy that's working 98% of the time. Type in a yes, why yes, in the question section box if you think logically that would actually work. If you're like, that sounds like it could work. Yeah, Jeff says that could work. Peter says that could work. Yeah. Now, that's what this is. So when we show you the back-tested results, that's using a diversification entry strategy where we drop our investments. We don't become what's called all or nothing traders. We split up our investments. We lower it so we have less risk. And then we use destinations for an exit. And what we see is over a 12-month period from their back test, on the S&P 500, it averages $13,678 a month over a 12-month period. On the NASDAQ 100, it's averaging $13,325.99 a month over a 12-month period. On the Australian dollar futures, it's averaging $909.04 a month over a 12-month period. On the euro futures, it's averaging $3,140.35 a month over a 12-month period. On the S&P 500 micro, $1,525.14. On the NASDAQ micro, $1,487.09 a month. Okay. What if I was able to tell you that here at Traders Agency, we were able to automate the entire process to where what you see on your screen, you can use a technology that can automatically enter you in by diversifying you and then automatically exit you when it hits the destination. So this way, if you're very busy or you do not have a desire to be in front of your computer all day, you can still potentially benefit from this pattern. Type in a ME, M-E, into the question section box if you want me to show you how that works. It's pretty impressive technology. Okay. Now, I have about 5 minutes remaining, and then I'm going to have to get going. But let me go ahead and show you how this works. Now, full disclaimer. Number one, this is built off of NinjaTrader 8, which is a charting software. Number two, This is not a 401k style trading. This is not a mutual fund style trading. This is not a set and forget style trading. This is not a money printing machine. That's what this is not. What this is a self-directed auto strategy. And it's very much like a calculator. So think of a calculator on your desk. If the calculator just sits there, it does nothing. It produces nothing, it does nothing. But the moment that you put in an equation and you tell the calculator what to do, it will do exactly what you ask of it. That's what this works. If you have this tool and you do nothing with it, it does nothing. But if you tell it what to do, it will do exactly what you tell it what to do. So how does that work? Well, you will have all the control. On the right-hand side, this is how you edit this. You can decide to take buy trades, sell trades, or both. And you can decide to tell it how low you want the market to be before you enter into the market buying. You can decide how many contracts you want to trade. You can decide how big you want your stop. So if you only want to risk $100 in the trade, you have all the control over that. If you want to risk $1,000 in a trade, you have the control over that. If you want to risk $10,000 in a trade, you can do that too, but it's your choice. You can decide how often you want to size in. You can pick your own symbol. I'm going to use what's called M2K. M2K is what's called a micro E-mini contract, and which is the smallest investment size you can choose. Now, we've been utilizing these settings since March the 18th, and let's go ahead and run it. And trading only one micro at a time. Let's see what this is showing. It's going to run the trade by trade performance. We're going to see what it's doing. Let's give it just a moment, and it's going to give us the back test. Okay, so it's generated $4,327. It's averaging 75.47% win ratio, and it's averaging $1,534.58 a month, trading one micro at a time. If you trade two micros at a time, not 20, not 15, just two, let's see what it does. Now, this shows it's generated $8,654. It's averaging 75.47% win ratio, and it's averaging $3,069.15 a month. Before we go any further, let me just kind of ask the question, which is this. Type in M-E into the question section box if you'd be happy making a little bit over $3,000 a month, winning over 75% of your trades, just trading a couple micros, which are the smallest investment size you can possibly choose. Jeff says me, Ralph says me, member says me, active trader says me. Now, this makes money over time. It does not win all of its trades. It's currently winning 75% of the trades, which is right on the 70-30 split. Up here towards the top, and I have a couple more minutes, but up here towards the top, we have all the information that you will see for the day-by-day experience. On the left-hand side shows the date, shows the number of trades placed for that day, shows the net profits or losses, and then shows what was made for the day. Let me kind of walk you through it. So it starts out losing $307 for the day. The next day it makes $667 for the day, and then it makes $2,611, then $950, then $254, and $1,026. $476, $334, that makes $2,356 for the day. $419, and then it loses. Now, understand this. Nobody likes to lose, but losing is a part of this. And we do our very best not to lose, but it does happen. And so we think to ourselves, well, if we are going to lose, let's just win a bunch of days before we actually lose. So let me kind of show you what I mean. So we go 1, 2, 3, 4, 5, 6, 7, 8, 9 winning days in a row, and then we have a loss. Nobody likes to lose. Well, let me just kind of ask you in regards to things being somewhat fair. Type in a yes, why yes in the question section box if you're saying to yourself, I don't want to lose, but if I am to lose, it would be really nice to win at least 9 days before I lose. Somewhat of a fair trade-off. Okay, so now we have a loss. Let's keep going. Now we go 1, 2, 3, 4, 5, 6, 7, 8, 9 winning days in a row, and then we have another loss. Then 1, 2, 3, 4 winning days in a row, then we lose. Then 1, 2, 3, 4, 5, 6, 7 winning days in a row, and then we lose. And then 1, 2, 3, 4, 5, 6, 7, 8 winning days in a row, and then we do something that we haven't done in a while. We lose 2 days in a row. Then 1, 2, 3, 4, 5, 6, 7, 8 days, and then we lose. And then 1, 2, 3, 4, 5, 6, 7, 8, 9 winning days in a row, and then we lose. So right now, that's kind of the experience that we have with this strategy. So currently, this strategy is working 98.8% of the time for the strike rate. Trading a couple micros at a time, it's winning 75.47% of the trades, and it's averaging $3,069.15 a month. It makes money over time. It's not perfect, but it's pretty darn good. Now, I'm running out of time. I have about 3 minutes remaining, and we're going to have to get going. But here's what I want to ask. If you're in this room and you're watching this, and you're saying to yourself, as long as this is affordable, I would like to try this. Do me a favor, type in a me, M-E, into the question section box if you're saying to yourself, as long as it doesn't cost an arm and a leg, I would like to try this strategy. So Gavin says me, active trader says me, Ralph says me, member says me, David says me. Okay. Now, I'm out of time, but I'm going to just give you a high-level overview, and then you can make a decision. Number one, this is a well-built program. What I mean by that is we have live classes, an online university, foundation lessons, checklists, manuals, how-to videos. We have an entire team here at Traders Agency. We can do white glove installations, which means we can download all of your software for you on your behalf. We just can't pick the settings, which we have a class for that. Everything is done online, and we can get you set up today. If you're saying to yourself, as long as this is affordable, I'm in, here's what I would suggest that you do. Go ahead and click on the orange button with the arrow inside of it. I have 1 minute left. And then down at the bottom says enter a question for staff. Do this. Type your name and your phone number into the question section box. Click send. And then I will have my team contact you right away. We will give you an overview of what you get with the program, and then we'll let you know what the promotion we're having today. We're having a joint webinar promotion because we're doing this joint presentation, but I'm out of time, so I can't really walk you through that, but we can walk you through it over the phone. So at this point in time, I have 30 seconds left, and I got to pass it over. Type your name and your phone number in right now. So, hey, Gavin, I have your telephone number. We'll have one of our team members contact you. DIK, I have your telephone number. We'll have one of our team members contact you, no problem. Peter, Jason, Caroline, have your telephone number. We'll have one of our team members contact you. Gavin, you can use NinjaTrader 8, or you can use TradingView. Jeff, have your telephone number. Scott, have your telephone number. Appreciate the opportunity. So we'll go ahead and we'll contact everybody as soon as this ends. But I want to give a big thank you to Investor Inspiration. Just want to say, Investor Expo. I want to say thank you so much for the opportunity for having us on here. We appreciate the chance to kind of share with you the strategies that we like. We like to share with you the testimonials, the overall movements, the overall opportunities. I think for most people, if you can make an extra $3,000 or $4,000 with relatively small investments with controlled risk, I think your trading experience would start out on a very strong foot. For those of you who express interest, stay by your phone. Thank you so much for the opportunity.
Well, we're going to talk about self-esteem and self-confidence, but I wanted to start actually, since although I specialize in the mental and emotional area for traders, really, I think the most important part of trading, at least the equal half of trading to the trading plan itself. I wanted to show everybody a gold chart. I wanted to kind of give an idea of what's going on, because today is kind of a monumental day. So let me share my screen, and I'll show you the gold chart that I'm looking at, because the stock market, Dow's down over 1,000 points, S&P down over 100, and I think there's some things going on that I want to show you, especially in relation to gold.
Sounds exciting. I will get back to you at 9:30 Pacific.
Okay, do I have the share screen button? I don't see it.
Yeah, the screen already yours.
Oh, am I already sharing?
Yep.
You can see the gold chart then.
Yes.
Great.
I can see some chart.
Okay, the gold chart. I wanted to show everybody stay with me, Anna, because I want to make sure that they see the presentation also. But I wanted to show this chart. I just want to give you. I've been trading over 30 years, almost 40 years now, and there's some things that we old-time traders look at when we're managing the gold market and the stock market indices. It's kind of an official bonus to the presentation, if you would. You know, we look for accumulations like this one right here. You can see where the market is going sideways here on this chart, right in the middle. You see, you can't seem to find direction. We used to take an actual protractor before they were online, before the internet. We used to have paper charts, so we used to put the point of the protractor right here, and we used to put the pencil part of the protractor right here, and then we used to spin it, and we used to get a target for whichever way it broke out. In other words, in this particular accumulation, if it broke down, we would be looking at a target over here, and if it broke up, like right here, we would be looking at a target up here. And you can see how nicely that elementary way of looking at things work. And of course, the thinking behind it is that if if there's indecision, the length of indecision will lead to when the decision is made, a power equivalent to that hesitation. You see another one here where you have a really tight accumulation. If you would have put we broke out here, if you would put the pin of the protractor here and the pencil over here, you would have had a target from up here. So it gets fairly close. I used to have a trading plan I did very well with for years that took profits at 80% of whatever the protractor told me to do. But what I want to point out to you, of course, is this big V bottom here in the gold market, and this accumulation that we're seeing right now. Now, it's a much wider and much more volatile accumulation than the ones that we've seen in the past, but it's an accumulation nonetheless. And these trend lines that I draw, these are the charts I work off. So there's a lot. Don't worry about this word trend line. I think it's going to be throughout my whole presentation. My computer is blitzing for that word. But if you see, when we were going sideways and looked like a pennant, we're connecting the tops. You looked at the breakout. I'm looking for a breakout to the upside, for whatever it tells me. This was a breakout to the upside. It had a little bit of legs, but of course it failed at the resistance area up here, which is the normal strong resistance of the previous high, especially when it's a previous high of a very long time like this. This is a daily chart. And so we came down again, we formed another, I drew another tops line here, a sloping line, and we are just looking like we're breaking over that today. So I'm starting to get interested in believing that we either are going to approach this top again, which is now a resistance, but more importantly, I'm looking for a breakout of this accumulation one way or the other. And you can see that if we took our protractor and put the point here, if we break out of the accumulation somewhere in here, we put a protractor here, and then we put the pencil here, and we would have a target somewhere in the 1900 to 2000 range. So I just wanted to show you this. The other thing that keeps me interested in the gold market is that generally gold, not always, things change. And with the lower interest rates we have right there, it's always teasing inflation. That's why gold seems to be hanging out at a higher area than what you would normally expect compared to what's going on in the stock market. Usually a nervous stock market leads to money moving into gold because of the sure nature of the value of gold. But that's not what's happening here. We have a stock market in the major corporations that's going higher, but a lot of stocks are of course lagging. But your indexes are higher, and yet gold is hanging out at a very high area. This is a little bit strange to me, and the fact that we're accumulating here at a higher point, we may have a minor breakout of this trend line, and then a major breakout if we cross here. But if you're following this market and you're looking to go long on a breakout, then I just gave you a way with my protractor explanation to put the pin around here wherever it breaks out. Put your pencil here in the beginning of the accumulation and just let that protractor roll you in a semicircle up to where, or a quarter circle up to where that target could be, and look for 80% of it. Just an old trick that I had, thought I would mention it to you. Okay, let's take a look at my presentation today, and I want to that's you, that's here. Let's look at here. Okay, if you're still with me, Anna, can you see my presentation in full screen?
Yes.
Okay, great. All right, let's get going. Thank you. Anna is my unpaid assistant today, who she should actually be taken. Anna is a very smart woman who could probably do this presentation better than I can, but I'm going to give it a shot. Listen, I'm all about the mental and emotional issues of trading. I do believe that you can approach the market in many, many ways and win. You can also approach the market in 3 times the amount of ways and lose, which is what, maybe 10 times, which is the way most traders approach the market, because we all know that 90% of traders lose. So why is it that new traders, knowing that actual fact, and that fact is a fact derived from institutional firms, firms like Think and Swim and Trade Station and all the transactional firms that have actually done studies about who wins and who loses. 90% of traders lose. It's a proven fact. They erase the names, but they look at the monthly and yearly statements. Well, the reason is because of the second part of trading that's not happening for most traders, and that's paying any attention at all, zero mostly, to the mental and emotional issues of trading on a consistent basis. And I believe those two numbers, those 2 percentages, are the way they are because of each other. I believe that 90% of traders lose because 90% of traders pay no attention to the mental and emotional issues. And I think it's fairly easy to prove. But let's just call it a pretty strong notion right now. So I concentrate on this, and I'd like you to just spend this next half hour with me and talk about your innards, your confidence. I'm not going to sell you anything today, which I hope is very encouraging for you. I will give you a book to download at the end, and it's a free book. It's been downloaded actually over 300,000 times, even though this slide says something different that was created last month. But I'll get to that, and I just want you to download the book so that you have it. It's a free book, and it'll also put you on a list for my an upcoming free masterclass that I'm working on the 3 hacks to getting you disciplined quickly. Okay, so you'll get the free book, and if that'll put you on a list, you can listen to some of the things I say and so on. But there's nothing to sell you today. That's my wife. She's the one that sold me. Actually, I sold her on getting married in 1981. So it's 39 years ago, and this is how she looks a year ago. So unbelievable how this woman has kept her beauty all of this time. And me, I'm just the hack next to her, trying to keep up. But my wife is a subconscious trainer. When I married her, I didn't ever know what that meant. But in the end, here it is, 15 years ago, we decided to put our talents together. My talent in trading and Tish's talent in helping traders with their mental and emotional issues. We formed the Disciplined Trader. Actually, it was in 2005. We originally took control of the name and the process. And we've been helping traders with the mental and emotional issues ever since. This is a little bit about me. I've worked for Payne Weber. I ran a very large options firm in the 1980s. I've had my own. I traded as a commodity trading advisor, trading millions for high-end customers. I cleared my own trades through my IB, but this is the most important work that I've ever done and my wife has ever done, and that's with the disciplined trader. I've written several books. They're all on Amazon. And I've taught people how to build trading plans. Well, you know, in the beginning, we were teaching traders how to be disciplined with their trading plan, and they were losing money. And they said, well, what good is it? I said, let me see your trading plan. You know, no scheme for real money management, no defense against in a losing trade, no written rules and plans. So I said, oh my gosh, you know, we're doing almost half the job here in not making sure that before we train people to be disciplined to follow their trading plan, that they actually have a decent trading plan and with the money management scheme, etc. So in all of our courses, we always include a basics area on building a trading plan, money management, and so on. So I wrote a book on it. I got so angry about it. So that's what happened there. And here's my wife is also an author. She's on many of the covers. It says the Florida Hypnotist here, but she's been on meditational book covers and so on. She's very well known in the world of mental and emotional control. Helped many athletes that won't go through the names, but many golfers. In fact, Bernhard Langer, who's the top of the Masters list right now for golfers, still uses our software. In fact, he was a big promoter of our software. But we've made many softwares for mental and emotional issues, or for salespeople, in our company over the years. But the last 15 years, we have zoomed in on traders because there's no reason why most traders are losing. There is a reason. They're paying no attention to the mental and emotional issues, and therefore, let's do a little paying attention right now. Self-esteem. This is root stuff. This is stuff that you have to have in order to even get started being strong enough mentally and emotionally to be a successful trader. The definition of self-esteem is in psychology, the term self-esteem is used to describe a person's overall sense of self-worth or personal value. Self-esteem is often seen as a personality trait, which means it tends to be stable and enduring. Self-esteem can involve a variety of beliefs about the self, such as appraisal of one's own appearance, beliefs, emotions, behaviors. It's your assessment of yourself. It's the appraisal of one's appearance, beliefs, emotions, and behavior. You have to feel good about yourself. You have to have a positive self-esteem, your overall sense of worth, your personal value, okay? You must believe you deserve to be successful, which we find in our coaching. Many of our traders deep down inside don't believe that they deserve success. We help them with that. This is your base of positive belief. Self-confidence is something at the next level, which is next level up, which is confidence in oneself or one's own abilities. A strong positive self-confidence is critical to your ability to achieve. It can make you proactive. It makes you forward-thinking. Move forward successfully toward your goals. Okay, self-confidence is that energy to propel you forward. Okay, and if you don't have a base of self-esteem, you're not going to have much self-confidence to move forward. Sorry, I just took a little drink. All right. Strong positive self-esteem, strong positive self-confidence. You add the two together, and you've got a success base for a trader. Okay, you're strong in the way you think and you act, and your belief of self, and your positive expectancy. And I'm not going to give you a few solutions today, but if when I said that you don't believe you deserve success, you need to solve that problem. Maybe you need to email me. I'll explain a little bit more about how that's done. But you need to get there. You need to believe that you're a worthwhile person and that you're ready to receive what you deserve, and that's self-independence, financial independence, etc., etc. All of the dreams that we find that most traders have. So strong positive self-esteem, strong positive self-confidence. Okay, here's some tips on maximizing your strong positive expectancy, because you need to expect to have a good day every day when you trade. Now, a good day does not necessarily mean making money. That's the mistake that a lot of losing traders have. A successful day is the day that you follow your trading plan perfectly, with no hesitations, no errors, no missteps, no deviation from your trading plan. Okay, to maximize your strong positive expectancy, one of the two most important things is to manage your risk, money management and risk management. During the trade, and you need to assess that management based on the total of your trade, the total of your trading account, and against the amount of risk that you're prepared to take in that particular trade. It affects this exercise of focusing on money management and risk management in your trading. It's what manages your emotional risk. You also have to do something they call staying out of the gap, and it's a concept that I want to bring to you that I think is very important, and I think you're going to agree. I hope you agree. Hang on one second, another sip. Okay, let's go through that. Money management. How much of my account am I willing to lose in order to have a decent chance of the return that I'm aiming for? And that's really the question of money management. How much are you willing to lose in order to get what you want in that return? And the main element of control, believe it or not, is your position sizing. I've learned this over the years. It determines the expected drawdown and your annual return expectation. That's actually a fuller conversation. But when you are looking at a market, I just showed you a chart where we had a minor, where if the market on this day holds above that downward sloping trend line, and we break above that trend line, that is a minor breakout. Now, in a few of the trading plans that I have, it would be okay to take a trade with a minor breakout, but a very small position, because you only take full positions in major breakouts that are confirmed. Okay, these are terms that I'm kind of throwing around at you, but you should have defined in your own trading plan. Position sizing is where the problem comes with most traders. It's where the problem comes of that gut punch loss, that you were so sure that the market would go in your favor, and you bulked on a position, you added onto a position, and then all of a sudden you wake up the next morning, or you go to the restroom and you come back on the same day, and the market's turned around and you're suffering a big loss because, oh, incidentally, you didn't put in your stop. Position sizing is one of the two essential keys. The other, of course, is is where you place your stop to defend your equity against at a certain percentage against your total equity. So maximum emotional risk would to qualify for a maximum emotional risk, you would have deep stops and a high number of positions. In other words, you'd let the market breathe nicely in a deep way, so you'd have your stop low and you'd have a high number of positions. This is where you have the maximum risk, the maximum emotional risk also. Deep stop, sometimes there's if you use average ACT, is it ACT? I always mix that up. Average, somebody put it in this, somebody put it in the chat. I don't know why I'm losing the term, but it's an average volatility measure in order to put your stops. That will sometimes give you deep stops. Higher the volatility, the more you let the market breathe. If you're using the bar, the low of the, if you're long and you're using the low of the bar before, that's a popular way of trailing a stop. Whatever you're doing, deep stops and high numbers of positions gives you the maximum emotional risk. The good part about it is if you're right, you're going to score big. If you're wrong, well, then you get that punch in the solar plexus because all of a sudden you've risked more than the 2 or 3% that's maximum that you should be risking in a trade. The minimal emotional risk, the minimum would be a very shallow stop where I think Josh was talking about in one of the examples of the previous demonstration, he mentioned that that a lot of new traders will keep that risk very shallow. And that can work in certain trading plans as an overall strategy, but again, it's got to be tested. The issue is that shallow stops will get you stopped out more. And if you have a small number of positions and a shallow stop, your emotional risk is at its lowest because even if you lose, it's for a very small amount. And in addition, you only have 1 or 2 positions. So that's the minimum emotional risk. Well, the pro, of course, is if you're wrong, you're going to lose a small amount. And if you're right, you're not making any money, so you're frustrated. So the perfect thing is somewhere in the middle. So the best approach is to be patient and wait for the ideal setups, which I call A+ setups, to enter a trade where you have a high profit potential and a low loss potential according to your trading plan. Now, size your positions according to the spread between risk and reward. So you really just have to do the math. If you have several positions on, which in the futures market, that would be several contracts. If you're trading stocks, I look at positions as 100 share lots. If it's a very small stock account, maybe it's 20 share lots or 50 share lots. But whatever it is, it's divisible by 2 or 4 or whatever you're trading, so that you can, in your trading plan, hopefully you're scaling in and out or taking profits all the way up. Very few trading plans have all in and all out that really work well over time. All parameters should be committed in writing and in your trading plan. So again, having the patience, and that's huge. Patience is huge in this business. In fact, of all the mental trainings that we offer to traders to help with their skills to be a better trader, whether it's taking trades without hesitation that your trading plan tells you to take, so that you're not chasing trades, and then all of a sudden it's two seconds later it's way beyond. You got to take a trade when your trading plan tells you to trade. Fear of losing, where you pull your stops in, or you remove your stop because you don't want to hit, you don't want to lose. All these fears that make you do the wrong thing. Patience, lack of patience, is one of the most popular turnaround skills that I've seen over these years. When a trader becomes patient enough to see those moving averages cross before they take a trade, instead of anticipating that they're crossing, waiting for the close of a bar instead of 20 seconds before the close of the bar, and you don't want to wait that 20 seconds because you can get a couple extra ticks. Patience, having patience, has been the big turnaround has resulted in the most positive turnaround for traders over these 15 years. I just want to give you that. So if you're better off having patience and missing a trade, because when you have patience and get a trade, you know that it's based on the parameters that your trading plan is giving you that identifies A+ trades, okay? And an A+ trade is identified by looking at your trading plan, statements, or hopefully you're journaling, which is another thing that I'll be going through in that some of the hacks that I'm going to give you in a couple of weeks. In any event, if you look through your trading statements, you can see which trades and pick out the ones that are winning. You can see that there's probably 2 or 3 setups, sometimes 1 or 2 setups that's giving you all the wins, and you're giving it all back with all the other setups. These become your A+ setups. Okay, so you got to do a little work. You got to look at your trading plan. I know traders that don't even look at their monthly statement because they're losing, and you've got to see where you are. You got to keep assessing. You have to. This is a slide I call incentive to stress risk and money management. I used to have this up on my wall. I don't have it anymore, but in the early days I did. And maybe you want to take a snapshot of this slide and put it up on your wall. Because if you have a 10% drawdown, you only need an 11.11% rebound in the remaining equity to recoup your loss. Not bad. Well, 20% is also manageable because you only have to come up 25%. It's a little bit more of it's 25% more than what you came down, because you've got an extra 5% in there, but if you draw down 20%, then you've got to come back 25%. It's here that starts getting ugly, in this 30, 40, 50. If you're down 50%, you got to double your money. If you're down 70%, you got to make over 2 times your money. And down here, I have very seldom see a trader recover from here. So when you get in this area, this is the time that you want to, this 40, right in here, if you lose 30%, you got to stop trading, and you've got to reassess what's going on if you haven't done that before that. Okay, you should have other measures to halt trading and assess what's going on. Okay, so you don't want to get yourself in this area, because this is down in here, you're going to get to the 100% busted. It's just a fact. That's what I see. I've coached traders for years, for decades, and you have to use this chart to keep your trading losses reasonable. Okay, and what do I mean by that? Here's some rules of capital preservation. Be shy about pyramiding. Okay, only pyramid winning positions, and only when they continue to reflect favorable risk-reward ratios. So you've got to kind of manage each position when you're scaling in and out. I'm going to look here at the questions. I'll just stop here and ask: is there anybody with any questions for me, or just if you could just comment in the questions area. Just say you're with me, that you're listening. I'm not a guy that keeps on checking with you. I figure you're here with your valuable time. You're probably listening. Can I get some sort of an amen or a yes, I'm listening, and I'll this way I can continue with confidence. And you do want me to have confidence. That's okay. Patience with a proven trading. That's correct. Okay. Yeah, guy that's talking about patience, he better have patience. All right, number 2, risk only a small percentage of total equity on each trade, no more than 2% of your portfolio value. Even in the right now, you're looking, if you're looking at a place to short the S&P, it looks, you've got a jag, and if you shorted it here on a daily chart and put your stop at the high of the day, that's going to be more than 2% probably of your portfolio value. So there's a number way of still getting short this market if you're looking to get short based on the market staying down here in the close and giving a sell signal to everybody and his brother and sister in the world. But what I'm saying is that you just can't do it without measuring the risk. And to take on a risk, to take on a position after a big fall like that, you usually have to look at a shorter time frame, the 60, the 30, wait for a rally onto a particular point at which you have identified in your trading process, and look to short on an interim rally move. Okay, so risk only 2% of total equity on a trade, or less, of course. Limit your total portfolio risk to 6%. I'm a futures trader primarily, although we do trade some stocks and options. I'll sometimes have 3 and 4 positions on at the same time. Well, if I measure the risk that's outstanding in all my 3 or 4 open positions, I will not risk more than 6% on that total. It's very, very seldom. I can count them on, one hand in a whole year, or maybe 2 years, where I'll lose all of the trades that I'm in a particular day that's on at the same time. In other words, if you stop down on every position in your portfolio, you'll still retain 94% of the original trading capital. Most of the time, if I have 3 or 4 trades on, 1 is doing very well, 2 are somehow trying to find their way, and the 3rd one is maybe losing a little bit, or the 4th one. So it's a combination. Yeah, I have days where they all win and they all lose, but they're always limited to at least that 6%. Okay, and I won't take another trade no matter how good it looks. I'd have to get out of another trade, which I will do sometimes. If I see a better technical situation, I'll get out of a trade only to get myself in a better situation. Okay, so I'm always with the percentages. Be realistic about the amount of risk needed to make a profitable trade. Don't make a trade if it doesn't fit your risk parameters. Okay, and here's a few more. Reward to risk minimum of 2 to 1, preferably 3 to 1 or higher. I like the rule of 2 to 3 to 1. I will say that those of you that I've seen trading plans that that only win 30% of the time, but always are taking 3 and 4 to 1s. And I've seen trading plans that win 60, 65% of the time that are doing very well with a 1.5 to 1 reward to risk ratio. So it depends on your trading plan, but in general, that first number, your chances for success, the amount that you'll make being successful in trade, has to exceed the amount that you're going to lose, unless, of course, again, you're one of the few trading plans that's comfortable to run that lose more than win. And, you know, that's and I say that because even a good trading plan and there's plenty of them that lose more than they win as far as number of trades, you know, it can pound that self-esteem, that ego a little bit if you just lost, especially trying to run that plan at the very first time you try to run it. So it's very dangerous to your psyche, I think, to a large extent, to those that are not well trained from the mental and emotional capacities and skills that you stick to a trading plan that has more wins than losses as far as number of trades. Lock in at least a portion in a windfall profit. You know, that's something I think most traders don't do, and that's another gut punch when you have a huge trade that you've made 10% and somehow you either add a position and you see it fall back half an amount and say you're even. You start doing crazy things. It falls to a little bit of a loss, and you put a limit in to get back to even, so that you weren't the idiot that lifted your stop. Look, you have to follow your trading plan, and when you're lucky enough to get a windfall profit, your trading plan really should tell you to take some partial profits, I think. Okay, and leave the rest on for what I call lewd and lascivious. All right, the more active I am, the less I will risk on every trade. I think that's something that I've learned. A lot of traders won't agree with me, but it's something that I'm always defending my psyche. Okay, I always believe that traders need to defend their psyche, and so when I get more active, when I'm on 3 or 4 or 5 positions, I'm risking less on each one because there's a possibility I can miss something I'm looking at one chart, even though they're all on my screen at the same time. You know, you got to keep focused, and so I realize what's going on, and if I'm making a trade in one of those 4 positions that are live, I'm in the process of making sure that trade is right. And I'm taking my attention for 10 seconds, 20 seconds off the other trade. So you got to risk less on each trade as you get more active. Never add to or average down a losing position. I really think that, unless you have huge deep pockets and you're doing something they call scale trading, which you really have to have some guts about. And one of these days, I'll talk to you about that. It's not for anybody almost. All I'll just say is that averaging down is usually not a good idea. Okay, you're just adding to something that doesn't seem to be working out. Okay, be willing to stop trading and reevaluate the market on your methodology when you encounter a string of losses. I use 6 losses as my string. Okay, if I have 6 losses in a row, or even 8 out of 10, not 8 out of 10, but 8 out of 11 or 2, I will freeze time and I will look at my trading plan. And most of the time I'll just continue the trading because these things can happen. But, to stop trading and to be worried and concerned after 2 and 3 and even 4 losses, you don't have enough trust in your trading plan. And that's going to shape your skill of some of your discipline skills. Okay. So I want to talk a little bit about the gap, because this is something that you won't hear from everybody, but I think it's important when you're looking especially at the self-esteem and self-confident area, that deep area that you need to take care of before you do anything else in trading. Okay, you have to have that belief that you're going to be successful, the belief that you're deserving, the belief that you're in this to win. Okay, so I need to give you a couple of definitions. I'm going to identify something that I call the ideal, which is a mental construct. It's like the horizon. It doesn't exist in our minds. It only exists it doesn't exist outside of our minds. It only exists in our mind, nor is it achievable. If I tell you about the horizon, okay, it's out there. It exists in our mind. I mean, it exists as a depth, but you can't go out there and touch it. The more you walk toward it, the further away it seems to get. You can't. The closest the horizon's ever got for me is when I'm on the ocean. But I've never tried swimming to it, and I won't. But because it's just a construct of my mind, it's not achievable. But it allows us to set goals to motivate ourselves. When we start achieving things in our life toward that construct, toward that ideal, we tend to move that ideal out. If we make $1 million, people who have $1 million want to make 10 million. You know, even though the ideal in the beginning was $1 million, you keep on moving out that ideal as a construct. Now, a goal is something that's specific. It's measurable results, and it's inspired by the ideal. You've seen other people make money, that golden 10%. Somehow you believe that could be me. I know a guy that's not half as smart as me, or a woman that's not half as smart as me, and they're making money. I have to be able to make money. What they have, incidentally, is their mental and emotional control. That's what you probably don't have. You may have a better trading plan or trading system, but you're not winning. And the reason is you're not taking care of you. Hey, you're the trader. You're the first thing you need to take care of, because without that mental construct, without the self-esteem, the belief that you are deserving, nothing's going to happen for you, okay? So you got to learn to avoid the gap, and which is the skill of being happy and a positive trader, okay? Avoiding the gap is the skill. I'm going to show you what the gap is in a second. The actual is the actual achievement of life, where you've gotten in your goal. In other words, if you wanted to make $10,000 this year on your $10,000 account, you wanted to at the end of the year you have $8,000. Well, it's not, you didn't achieve your goal, so to speak, but the actual is $8,000. You headed toward your goal, you had a good year, but the actual is where you actually achieved from your starting point, okay? The gap is the permanent difference between the actual and the ideal. In the state of my example, if you have a $10,000 account and your goal was to make $10,000, your ideal was to make $10,000, okay? You only made 8. Well, that difference between 8 and 10 is that gap, okay? Let me give you a visual on this. That's my head. Actually, it looks more like Captain Picard's head, but it is somebody's head, although I think I see a little hair on the side here. Maybe it's Oliver Hardy's head. I don't know. But in this case, it's your head. Here's the actual, where we start out, okay? You set a goal. You set a goal somewhere between the actual and the ideal, okay? Here's where in this area is where you set your goals, okay? You start at the actual. Well, after the time period, hopefully all your goals have a time period, 90 days, 60 days, 1 year, whatever it is, you reach actual 2. Well, you didn't reach the ideal. And there are a lot of traders and a lot of people in their lives that measure themselves against the ideal. In my example, here's somebody that went from $10,000 to $18,000, and yet because they didn't get to the 30 or 50 or 100 that they wanted to get to, they feel they're they're standing on the actual 2. They're standing on the 18,000 and looking up at where they wanted to go, the ideal, that horizon that is going to keep moving anyway. But you're measuring yourself against the ideal instead of what you should be doing, and that's standing on the 18,000 and looking back at whence you came, and patting yourself on the back and say, hey, I did pretty well. I didn't quite reach the perfect goal, but hey, I made $8,000 on my 10 grand. There isn't a money manager in the world that wouldn't take an 80% jump in their equity, and I did that. Darn it, that's great. I'm not looking up at what I didn't achieve, where they call the gap. This is negativity here. This is, if you spend time in the gap saying, I really wanted this, but even if it's $1,000 on actual 2, you should be looking back on actual 1 and say, hey, it's $1,000. It's not gonna, I can't retire, but it's $1,000, and I did well. But I know the mistakes that I made. I'm taking the steps to correct it. I'm in good shape. This is the reasoning that you need to have in order to have the self-esteem and self-confidence that you need as a trader. Okay, this is the base you should be operating from, not pointing to the ideal and saying, I'm a loser. I can't believe I didn't do it. I had the big trade, but I only made a little, and I stopped out too soon, and I took my profit too early. I hear this all the time. So what? I feel like pushing you. And when you say I took my profit, sure. Yeah, you left it. I say to yourself, hey, you left it for somebody else. You're a nice guy. No problem. But if you want a little bit more next time, you know, then follow your trading plan next time. How about that? How about not being nervous when you trade? How about focusing on your mental and emotional skills instead of just trying to run your trading plan on your current emotions that aren't serving you as a trader. Okay, how about that? So I'm saying to you that I'm not ridiculing you. I am ridiculing, maybe I am, but my wife says to me, sometimes you're coming down on him a little bit too much. I'm not coming down on him because I know what you can be. I know that everybody with a passion to trade can do this, but you need the skills. You need the mental and emotional capacity skills. You need the skill of patience. You need the skill of being able to make a trade without hesitation when you're trading. But you need to exit fear. You need to exonerate fear. You can't be trading from fearing losing money, moving your stops around, chasing trades, revenge trading. These are all emotions and capacities that are for the losing trade. That's what the 90% are doing. The 10% winners are taking mental and emotional control, and they are developing the skills as such. Okay, so if you're in the gap, if you place yourself on actual 2, okay, and you're measuring yourself against that ideal, okay, that horizon, you're going to feel like failure. You're going to be frustrated, disappointed, guilty, depressed, low self-esteem. This is not where you want to be. Where you want to be is measuring yourself against actual 1, which is the positive zone. You want success. You'll feel satisfied. You're going to talk to yourself about how confident you are that these small gains that you made are going to lead to the larger gains. You're going to enjoy yourself. You're going to be living in a positive zone. You're going to be optimistic. You're going to develop a high self-esteem so that when you go to a party and people ask what you are, what you do, you don't say, you mumble. Oh, I'm in the market. You'll say proudly, I'm a trader. I'm a trader and I'm doing it. I'm making it happen because I'm living in the positive zone. I'm not in the gap. I see my losses and my success as learning experiences toward my overall positive self-esteem and goals. That's you. That's the new you. And if it's not the new you, make it the new you. Okay? So stay out of the gap. Appreciate how far you've come and make new goals to go even further. Okay? So you got to ask the question. The first way you start is, what is your primary thought or emotion that has you trade in a way that compromises or hampers your trading success? What emotion or thought is getting in your way? Start there. Start with that, turn that around, and that will be like it becomes like dominoes. Once you turn the primary problem around, the thought or emotion that's holding you back, and we have methodologies to do that at the Discipline Trader at a very inexpensive price. I want you to consider, being part of it. Again, I told you I'm not selling you anything, but I do have to say that if you can identify your primary thought or emotion that's holding you back, and you can attack that and turn that around into something positive for you, then that will, like a domino, start to affect the other problems and issues that you have from a mental and emotional standpoint. Will be easier to solve. So here's what I want you to do. It's over 300 downloads now. This is my book, Mental Fitness for Traders. I wrote it about, I think, 11 years ago. Some of the chapter titles are limiting your winners and letting your losers run. Have you ever done that? Or the seasoned trader feeds on new traders. I tried to make it a lively book. It's gotten, not everything I write gets accolades, but this gets a lot of accolades from this book is really what put me on the map, and I want you to have it. Okay, all you got to do is go right here to your copy's free to disciplinetrader.com/MF4T, which is kind of short for Mental Fitness for Traders. So the disciplinetrader.com/MF4T, and probably maybe even a more important thing is it's going to put you on my list. So over the next couple of weeks, actually the next 8 or 10, maybe in the next week, I'll be naming a date, which will probably be the week after, where I'll be going through the 3 hacks, a series of short videos that I'm making. You're going to love them. It's the 3 hacks that'll get you disciplined quickly, and it's a free masterclass. I want you to know about it. So if you download this book, you'll be on my list. You'll get that notification, and all will be well in your town, and all will be well in your mind. Okay, I hope you enjoyed the presentation. Again, I come from a different place. I'm a trader, let's face it, but I know that it is your discipline that's probably stopping you, or your lack of it, from being all that you can be as a trader. Get the book, attend my master class when it comes around, and be all that you can be. Okay, and I'm done. I am history.
It's a little bit tough. So, okay, good afternoon, everybody, or evening or morning, wherever you are, whenever you're watching this. My name is Hugh Grossman. And a lot of people ask me, say, Hugh, I don't care about all that other stuff. Just show me how to make money. I don't care about all that. Just show me how to make money. And I got to tell you, a lot of that stuff that Norm was saying earlier, hey, guys, listen, pay attention to that, all right? Everybody, the more knowledge you can absorb, the better trader you will be, okay? There's no such thing as a bad trainer, I don't think, and not that I'm aware. Any information you can get, all the better, and you're going to get better trades and going to become better at it. So anyway, let's get started. I actually have a simple strategy that I'm finding is having at least 85% success of making 6% or more. All right. And actually, if I told you the real number, you wouldn't believe it, but I put the conservative 85% on it. So, but before we get started, I want to have a special thank you to Anna and InvestorExpos for allowing us to present here to you. And hopefully you're going to get some great information out of this. I'm really looking forward to this. So once again, welcome everybody. And all right, so first of all, I want to tell you, here's what we're going to do here. First of all, I'm going to tell you, why trade with us? Who are we anyway? Who is this Hugh guy? Why should we listen to him? Why SPY options? All right, I think it's the best choice for today, bar none. And I've got a simple strategy I'm going to show you right now, very simple, and your next steps in becoming an expert trader. I think that's very important. This guy's having fun checking those things out, but we're going to move along here. So number one, why trade with us? Well, first of all, we trade what we teach, and we teach what we trade. Very simple. Okay, very simple. So let me tell you a little bit about my background. In the beginning, folks, I used to be an internal auditor for a Fortune 500 company, used to try and climb that corporate ladder. Never did get to the very top. That's okay, though. I'm glad, actually really glad. So, but like most salaried employees back in the day, I used to hand off a lot of my paycheck to my guru to invest for my future. His name was Mike, and he was very good. He was a very good salesman. All right. He certainly got my money. Listen, I'm not knocking him. They have their part in the world, okay? But I found out that they actually sell the products that pay them the best commissions, and they're using us for, our money so they can advance their own agenda, and that's fine. Everybody's got to make a living. But by the time I realized what was kind of going on, I lost half of my holdings, which was many thousands of dollars. Now, the irony of this, and I know what you're thinking here. I know exactly what you're thinking. Wait a second, buddy. You used to be an internal auditor, and you're the last to know how much you lost. What's that saying? The dentist's kids got the worst teeth, or something like that. Well, that was true. They would send me the statements. I never bothered to open them up because I thought, well, that's my future. That's my retirement. I'm sure it's in good hands with Mike, and he's taking care of me, and on and on. One day when I realized just how little I had left, I gave him a call. I said, Mike, we got a problem. We got a problem, buddy, and I need to cut out of this thing because if I leave it to you, I'm sure you're going to lose all of it. And so we had a few words, and we had some really bad words. I made up some words I never knew before, I could say. But anyway, he wanted me to average down. I said, no, just give me whatever's left. Obviously, I have to learn how to do this myself. So I did. I set out to discover what's this all about. Obviously, I'm dealing with numbers all the time. I'm obviously okay with risk. If I already sort of accepted that losing half is okay, and it's really not, but this is the way I wanted to do. So I looked at equities, I looked at bonds, options, futures, index, all these things, okay? There are a lot of things to invest in out there, folks. Obviously, you know this. There are a lot of things to invest in. And I started with equities. I poked around at some of the other things, but I kept coming back to this thing called options, and I really loved options. For some reason, I just felt very, very comfortable with them, very much at home. And by the time I figured them out, I thought this is actually pretty cool. And the other good thing about options is that a lot of people really didn't understand them, which gave me the advantage, because that person who has the advantage over the person who doesn't is going to be the one taking the money away from the person who does not have them, right? And that's kind of the way it works. So eventually, I kind of figured out what works for me, but I'll tell you, it came with a price, and I want you to understand something. Success on the market is not a straight line. So if any of you think that you're just going to get some strategy and zip right to the top, just like that, well, that's really not going to happen. And I don't want to kind of lead you down that garden path, okay, because that's not the way it works. It's really not the way it works. In fact, you're going to have your ups and your downs, and you are going to have some losses, and you're going to have some challenges. And you'll find probably most of your challenges will not be the stock market, but it's going to be the person in the mirror. It's going to be fighting your own demons. And I know that my demons, greed is a big one. Fear of missing out, all those emotions, they are going to kick in as soon as you put real money in the market. Believe me, these gremlins are going to come up and do a dance on your head like you've never seen before. Fear, greed, ego. I could stay here all afternoon, tell you stories you won't believe. I've got a few of them in my book, Tragedies and Triumphs and Tragedies, which I'm sure I'm going to get to you at some point. But anyway, when it clicked, I got to tell you, well, it really clicked. It really, really clicked. And then people started asking me, Hugh, can you show us what you're doing? Can you tell us? Can you put it up on a website what you're going to trade every day? Can you show us? Can you teach us? And that's where this whole business, Day Trade Spy, actually started from. It was actually quite by accident. And that was 10 years ago. 10 years ago, and it's been going great ever since. But I'm going to tell you something. We are here to help you, and we really are. So why trade with us? Who are you? Well, we have the experience you need. We have that personal support that I think you crave, because everybody needs that. We've got value pricing in everything we do. When we started this business, all right, I got to tell you, I used to be part of other groups and different things, and you know how it goes. You're part of different communities. And one of the things I noticed that when I went to some of these other courses and seminars and webinars and stuff, there's a lot of upselling. Let's get you in on the freebie, and then we're going to upsell you, and we're going to keep upselling you until you cry uncle, and then you say no more. And there are courses out there you can spend $20, $30, $40, $50,000 before you figure it out that, hey, they're just selling courses. But anyway, when we decided to do this, we realized that, look, we are going to, number one, treat others the way we would want to be treated. And I also wanted to make a commitment that I'm not going to, coerce you or sort of lead you into spending a lot of money before you realize maybe it's just not for you. Because trading is not for everybody, and trading the way we trade is not for everybody, and we recognize that. So we don't want you to spend a whole lot of money, but we want you to spend a little bit of money because we want you to have skin in the game. Otherwise, it's not going to work for you. All right, so there is value pricing, and by that I mean fair pricing, fair for everybody. All right, we are also very approachable, we're accommodating, and we're here to be of service to you folks. We have no hidden agenda or costly upsells, and I got to tell you, our results are excellent. And I have people telling me every day that. It's not me telling you, it's everybody else telling me that. We have proven programs that work. And I think that's really very important. You want to align with somebody who actually has proven programs that just seems to work consistently in any market. And I don't have to tell you what markets are like these days. And I know there are a lot of people on right now who are new to trading, and people who may not understand options. All right, I know there's going to be a real extreme from people, just novices, just trying to feel this out, see if this is something they're interested in, and people who are experienced as traders. So right now I'm going to ask those people who are experienced to please, if you don't mind indulging, and if I talk about very simplistic things for those people who are new to trading, because I always remember my roots, and I really liked it when people sort of explain things to me. So what do? Well, we day trade options on SPY. Options, that's all we do. Options. What are options? Options are actually contracts. They're contracts with an options, somebody who sells you the option if you're buying them. It's a contract that says you have the right but not the obligation to trade a certain stock for a certain price by a certain date. All right, but what we do is our sort of mantra here: one stock, one strategy, 1 hour a day for incredible results. All right, and when I say incredible, I'm talking about consistent results, modest but consistent results every day. Now think about this. Let's say you make 6% a day, just a very modest 6%, one trade 6%, which using our system you can do very easily, or I should say should be able to do quite easily. Okay, I don't want to use extremes because I don't want somebody sort of pegging me and saying, well, you said. But anyway, 6% is really very easy to get using our system. And let's say you give a point back to your broker for commissions, which leaves you 5%. And if you trade that 5% every day, once a day, 20 trades, you've just doubled your investment money every month. Is that so bad? Folks, over the years, I got to tell you, we kind of figured out what works and what doesn't work in both trading and training. And I think that's very important. You don't want just somebody who knows how to trade, but you kind of want to know, you want somebody who's going to actually, be able to teach you in terms that you understand. So that's where we actually really shine, because we're really very But we're good at that. I'm going to tell you right now, we figured out how to relate to people, not just in terms of trading, but also in training. So why SPY? Why SPY? Well, SPY is a stock that tracks the S&P 500. It's actually an index fund, SPX. So what it is this. All the top stocks are in SPY. And I keep telling people, look, don't go for the junk out there. Don't go for the penny stocks, the pump and dumps, all that stuff. Stay with the good quality stuff. So if you were to say, well, I don't know what I should look at, and Microsoft, Apple, Amazon, those guys, believe it or not, these days, they are actually setting records. Those stocks have had record numbers in the last couple of days. Here we are, go figure, drive around, most of the stores, everything, businesses closed, locked up, boarded up, and yet some companies are making record, numbers in their stocks. So how do you trade something like that? So what we did here is we were looking at the entire group. So where the economy goes, that's where SPY is going to go. Now, what I like about it is this. This here is a chart of the actual weights. The top weighted stock here in the S&P 500 is actually Microsoft, coming in at only about 5.65%. Apple coming in at 4.89%. So what I'm saying here is if Microsoft suddenly went to zero in and of itself, it should not materially affect SPY. Now, the reality is, of course, it's going to be all kinds of offshoots that are going to affect it. But the reality is that, all of these are so diversified, and we've got all the sectors represented in here, 11 sectors. It's the most diversified fund out there. People ask me, well, gee, Hugh, why don't you diversify? I said, well, I can't think of a more diverse stock than SPY. It's all covered. They're all there. So it's the most traded stock as well. It's the highest traded stock. So here's a screenshot of the actual volume yesterday. 95 million shares had traded on SPY yesterday. Not too long ago, I remember actually several weeks ago, I guess it was now maybe a month or two ago, I can't remember, time just flies by, but I remember seeing it 450 million shares traded in one day. And then it tapered down after the high volatility and stuff. But even 95 million shares on one single stock, that's very liquid. That means that whatever you kind of throw at it, and even with options, and you get the right options, it's going to sell. And that's very important. You want liquidity. You don't want to buy a roach motel where you can get in, but you can't get out. Very important. SPY is very affordable. You can actually control 100 shares of the underlying stock for about $100. And that's what an option is. An option is a contract that gives you the right, but not the obligation to trade a certain stock. So you don't have to spend a whole lot of money to actually control a lot of shares. And this is one of the screens that kept me coming back. I should tell you, when I learned this, I probably hung up the the reins on this thing a dozen times. Just that's it, I'm done. I can't make any money at this. But I kept coming back, because I kept saying, look at this, I don't need a lot of money I don't need a lot of a move in SPY to make a lot of money. And I would always stare for hours. I'd be poring over these charts, the lows and the highs, the lows and the highs. I said, look at this. This is from yesterday. SPY hit a low on this particular, whatever it was, 21 cents. It hit a high of 404. Came down at 2 cents and it hit a high of 312. My gosh, I'm not looking to make hundreds. By the way, this happens all the time. I'm not looking to make hundreds or thousands of percent on the option in a day. But can I not make 5 or 10%? Am I really that incapable of finding an option that actually had a low of a penny one day and had a high of $3.02? Again, I'm not trying to make 3,000%, but I'm just trying to make 5 or 6 or 10%. I love SPY because it's also very exciting trading. It's also very profitable. And the nice thing about SPY is that it depends on what I want. If I want an exciting kind of a trade, I know which options to trade in that one. And if I want something a little more safe, say I'm just kind of relaxing today, I don't really want to get in there and watch it all day, I just kind of want something sort of safe, I can do that too. It's very, very versatile that way. And it's also very profitable. So now more than ever, why trade SPY? The other day, I read an article from some analyst or somebody really high up. I can't remember where it was, but he was talking about in this pandemic days and high volatility and stuff. And he said there are two assets that they should consider being in, and just a little bit more on the safe side. One is cash, and the other, if you're going to trade, SPY is the way to go. And I thought, wow, that was very reinforcing, very comforting, and sort of very encouraging to know that we're sort of on the right track on all this. So why trade SPY? Well, now more than ever, you can work from the safety and comfort of your own home. And these days of, stay at home, don't go out, don't go out. And a lot of people are losing their businesses, losing their jobs. Another massive unemployment number came out here. What, about 1.5 million or something lost their jobs last week or last month, whenever it was. I mean, we're at all-time high unemployment numbers. And I mean, it's pretty grim out there. And the prospects aren't looking all that great right now either. Let's face it. But if you can stay at home and actually have a nice career at home making money, is that so bad? Very safe and comfortable. And by the way, as traders, we were ahead of the curve years ago. Since having to stay at home, nothing has changed as a trader because we're essentially working from home anyway. So, and I like this because with SPY, you can work whenever you want, as much or as little as you want, wherever you want. I have traded back in the days when we could travel. I've traded in airport lounges. I've traded in ski resorts. I've traded in cruise ships, on the beach in Mexico, wherever. Okay, I can trade wherever I want. In this business, you actually have no real overhead or inventory that you have to buy, process, store, sell, especially to family and friends. Virtually no overhead. I mean, you've got your computer, but you already have that, obviously. So that's pretty cool. Imagine if you had another business, any bricks and mortar business. You've got rent to pay, you've got mortgage, you've got, well, you know what overhead is, right? It's a bad place to be right now. In this business, you have no employees, no government agencies to appease, no customers to procure service, try to collect from. You can actually start with just a little bit of capital and have unlimited potential rewarded for your skill. I love that because unlimited potential to me is very, very important. And also you have favorable tax concessions, depending, of course, on where you are. So the power of options, you've got limited risk, quick moves, and huge leverage. All three of these to me are very, very important. The way we trade, I should tell you, options are dangerous. They are risky. And I always tell people, look, you need to get the education before you invest in options. Don't go into this trading business with options unless you know what you are doing, because I can guarantee you will lose your money. I cannot guarantee you're going to make money. Nobody can ever guarantee that, but I will guarantee you will lose your money if you do not know what you're doing with options. But the way we trade, we can only trade what we buy. All right. So our strategy is we buy first and then we sell. We buy calls and puts, then we sell them. A call is an option if you think the market's going to go up. A put is an option you buy if you think the market's going to go down. That's all you have to know. So with our system, we don't do any spreads. We don't do any naked positions, nothing like that. Nothing with any high contingency liability situations you're going to find yourself into. We want to make the moves quick. We're not going to go into swing trades where you're going to have to sit and wait for days or weeks or months. And with the huge leverage, I love that power because that's really where this thing shines. I'm getting a very quick comparison here of SPY stock versus options. Again, this is for the new people. If I want to control 100 shares of SPY right now, it'll probably cost me about $320 a share. That'll cost me about $32,000 to invest. If I want to buy an option on that same 100 shares, because one contract controls 100 shares, I could pay maybe about $1 for that. So it's going to cost me $100. Now, if the stock moves up $1, then my stock is now worth $32,100. But if the stock moves up $1 and there's what they call a delta, this is the relationship between the option and the underlying stock. If the delta is 50, which it usually would be around this price, that means that if the stock moves $1, the option moves up 50 cents. So now my options are worth $150. $150. You might not think that's a lot of money, but you spend, let's say, $1,000, and now you've got a $1,500 investment. If the stock went up a buck, that's not so bad. What's the return on investment? If you put it in stock, your return on investment is 0.31% versus a whopping 50% on the option. And I don't know of too many people who trade stocks after tasting the value of options, let me tell you. All right. Obviously, where would you want to trade, right? Where would you want to be? Folks, I got to read this disclaimer real quick because I'm going to show you a strategy right now. I got to read this so that you understand. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand you're not receiving any advice as to what or when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning a trade are solely your own to meet your personal objectives and risk tolerances. You alone are responsible for all your own trading, and past performance does not guarantee future results. So here's the simple strategy that I'm finding really huge success with. And I think you're going to really like this. I see a bunch of questions lining up here. Okay, we'll get some questions after. All right, so simple strategy, very, very simple. In fact, in a recent study, I've enjoyed 85% plus within a couple hours or less, usually a lot less. And when I say success, and by the way, a lot of people out there measure success. They say, well, it went up a penny, therefore it's successful. Well, guess what? It isn't, because you wouldn't have sold for a penny profit. Or, you know, how do you measure success? Well, I'm measuring success with a 6% profit target, okay? So if you spend something like $1,000, if you have $1,060 in a little short period of time, that is now successful, okay? So that is what I'm considering success. And this time, this little strategy does at least 85% in my recent trade. It's very simple. The charts I'm using, by the way, are courtesy of TD Ameritrade Thinkorswim. So we're going to put the 1 and the 5 minute charts up on the board, okay? 1 and 5 minute charts. And you can install the 10 and 20 exponential moving averages. If you want to write this down, all right, that's what we're going to do. 1 and 5 minute charts, 10 and 20 exponential moving averages. So pay attention. When that 10 EMA, by the way, the green line is the 10 EMA, the red line is the 20 EMA. So when the 10 EMA crosses the 20 EMA, now in this case, I also have that little, you'll see a little arrow going down just to the left of that yellow circle. You can barely see it. That's telling me the 10 has now crossed over the 20 EMA. When do you see that candle in its entirety, that little red candle? After it stops, right? So this here is where you're going to get in the next candle. Maybe, right? What you're going to do is this. You're going to see when that crosses over on the 1 minute chart. This is the 1 minute on the left. Then you're going to flip over to the 5 minute chart. And you're going to see, is this kind of matched up here? Are we in compliance? Is the market going down on the 5 minute chart as well? Is the price under the 10 EMA? Is the 10 under the 20 EMA? Excuse me. If this was sort of reversed, if say the price was going up on the 5 minute candle here, I'm not going to be so in such a hurry to get in, right? I want to make sure it's in compliance. I want to make sure I've got some support here on the 5 minute chart, the longer term 5 minute chart. And if that is the case, like it is here, by the way, this is yesterday. Okay, this has actually happened yesterday. You'll see it up on the top, 6/10, June 10th. So if that's in compliance, then you're going to get into the trade right away. You're going to buy the at the money options expiring anywhere from 3 to 8 days out. 3 to 8 days out. Okay, very important. And then you're immediately going to put it up for sale for a 6% profit target. Okay, so you got that. Let me review real quick. Let me just kind of go over this, because I know some people can say, what was that again? Can you go back? 1 and 5 minute charts install the 10 and 20 exponential moving averages. When the 10 crosses the 20, that's the green line, crosses the red line, on the 1 minute chart, you're going to flip over to the 5, and you're going to check the 5 to see if it's in compliance. In other words, is that candle going in the same direction? Is it on the right side of the 10? In this case, it's going down, so it has to be under the 10 EMA, and the 10 has to be under the 20 EMA. Okay, and then you're going to buy the at the money options expiring 3 to 5 days out. Okay, and then immediately put it up for sale for a 6% profit target. Okay, this here is a chart. This here is a chart of the option itself. This is a chart of the option itself, and you can see here that the option actually delivered very quickly. Within a few minutes or a couple minutes. This is a 1 minute chart. So within a couple minutes, you'd have bought us somewhere around, oh, I don't know, $2 and change here, $2.96 or $2.97. I don't have to kind of do the math here. It hit the profit target of 6% within 2 minutes. This happened yesterday. By the way, this happened today too. I just didn't have time to actually put those charts on here to show you again today, but it happened today as well. So I'm pretty excited about this. I'm very, very excited about this. So this happens actually all the time. So now the next question is, well, if it's this easy, why isn't everybody doing it? And I get this question all the time, all the time. Um, and by the way, is the audio okay here? I have a question here that somebody is having issue with the audio. I hope the audio is fine here. Okay, I'm going to assume it is. All right, great question. Why isn't everybody doing it? Well, first of all, they don't know about the strategy. Sometimes they don't understand the nuances of options, and the human nature is to complicate things. And I get this all the time with various courses and different things I used to take a long time ago. Sometimes they like to just put on so many indicators onto the charts that you can't even see the price of the option or the stock. A lot of people don't trust themselves or the system. They don't have the time. They don't have the inclination to learn. They don't believe they can have, they have the capital. They simply are not interested. There's a million things. I mean, if you check around with your friends, find out how many do their own investing. And the ones that are investing, what are they investing in? Some people might invest in real estate. Some people might put it in gold. Other people might put it in, old cars. I don't know. So to find this day trading SPY options is such a narrow laser beam niche that so few people really do it. Actually, a lot of people are doing it now, and more people are doing it. And by the way, the more people do it, the better it is, the more liquidity we have. So it's very niche. It works very well. Excuse me. Sometimes I wonder, I really hope they don't make this illegal one day because it is so good. It is so good. So there are many reasons why people are not doing it, why everybody's not doing it. But don't worry about those people who are not doing it. Just know that you can. You can. And I've got another strategy here. And okay, I've got another strategy here that actually delivers 98% plus success. All right, 98% plus success, and that actually is really a cool strategy, and I think you're going to really enjoy that. But in all fairness, I'm not going to give you that on a free webinar. It also involves a little more time. Okay, so you're going to have to actually join the Winner's Circle trading room to access that and find out what that's all about. But I can tell you the people in the trading room are enjoying great success. But then every day we have people chiming in as to how much money they made and whatnot. So I think that is really exciting. So we have this Winner's Circle trading room every day, 9:20 to about 10 o'clock Eastern time. Sometimes we go a little bit later, depending on what's going on. And it's actually a training session more than a trading. I mean, it's a trading session. It is, of course, and we show our charts, but it's not let's watch Hugh trade. No. It's got nothing to do with me and trading. Although I do show my trades and I trade and we get into all kinds of trades and stuff. But this is really a really cool learning facility to teach you how to trade. And it's not, and unlike other trading rooms, and again, we designed this in such a way that we took the good from all these other trading rooms I'd been involved in before, and we eliminated the bad. This is not a coffee club. It's not something that's an open mic to everybody in the trading room. It's not something where, 2 o'clock, everything's quiet, somebody chimes in, hey, Joe, what are you doing? Oh, I'm going to take the kids, golfing or something. It's not that at all. These are events. They're events. We get together, we get in, we discuss the events of the day that are going to shape the market, where the market is going to go, and then we look for the setups, and then we get into a trade, make our money, and get out, usually done by 10 o'clock. And I want to tell you, this is actually a really cool thing, and you're going to want to get in on that. So what are the next steps to becoming an expert trader? Because that's one of the things I actually kind of want people to do, is become an expert trader. All right. I've had situations where people would just want to emulate me, and that kind of scares me a little bit because, first of all, I'm human. I can maybe make a mistake. I can maybe misjudge the market, or maybe the market just simply turns against me. But for whatever reason, I can fall over the cliff. Now, I don't like to lose money anymore, and I generally don't, knock on wood, but sometimes I do. And what's worse than me falling over a cliff is knowing that other people are following in behind me over the cliff as well. That really bothers me a lot. So I tell everybody, look, I'm not going to, trade your money, because people a lot of times want to give me money to trade. No, we're not doing that. First of all, I'm not licensed. I don't want to do that anyway. But I want to teach you. I want to teach you how to do it so that you can become the expert trader yourself, and you can make the educated decisions yourself, and you take the responsibility. because I'm not responsible for your trades, but I'm really excited when you do very well. And by the way, there are a lot of people doing a lot better than me, okay? And I'm so proud of them and excited. Just wish I can, reach out there and give them all a big hug. But here's the key. If you understand what's going on with options, there's no mystery to it. And I'm thinking here that most options traders don't really know what they're doing. They kind of discovered this and they're kind of jumping in, kind of like what I did when I first started trading options. I started trading options on equities and I would, oh, this looks good. I think I'll buy it. And then, a couple of days later, a few days later, okay, I think I'll sell it. Oh, I just made 20% or 30% or 100% or whatever. Honestly, I had no clue. And somebody asked me about the Greeks. I said, what? Greeks? Yeah, well, I don't know. It's all Greek to me. And I don't follow Greeks. I don't know. What kind of an answer is that? I don't know. What are you, technical or fundamentals? I don't know. I just kind of find a stock that I like. It could be an airline. It could be this. It could be that. And no rhyme or reason. I might like the food at that restaurant, so I'll buy the restaurant. That's kind of the most idiotic way to trade. And somehow I just kind of lucked out and went along with it. One time I made a lot of, I can't remember the company now. It was, I remember it was a telecommunications company. It was called Nortel. And I remember I bought, I don't know why, I bought a bunch of calls on this thing, and I held them overnight. I had no idea. I was trading 5, 6, 8, 10, different companies at a time, thinking that, oh, I'm a big hotshot trader. What's this guy's name, Mike Wallace on Wall Street and stuff. You know how it goes. Oh, I'm going to be a real expert trader, right? And then what happened was the next day they settled the lawsuit, and Nortel skyrocketed. I think I made about $40,000-$50,000 by mistake, by accident. Well, that's you got lucky, Hugh. You got lucky. That is not a good way of trading. You just lucked out. And I can tell you horror stories all day long too about losses. So I don't want to kind of get into all that right now. But there has to be a system to trade, right? You have to have a system that you follow that you can replicate over and over and over again. And when you understand what makes up options, what drives the price, the underlying stock, all these wonderful things, that actually puts you in a really cool advantage over those people who don't know. And that way you can actually go in and take the money from them, because let's face it, they're here to make money, but they all know the risks. And if somebody's going to make money, it might as well be you, right? Folks, you got to learn a strategy that's appropriate for your style, your goals. By that, I mean, our strategy is not going to fit for everybody. All right. And your style might be different. I talked to somebody the other day. He said, well, I like swing trading. I said, okay, well, good luck to you. I don't know where I can direct you on that, but I'm sure you'll find something. And we don't swing trade. I like the excitement of getting in, making money, and getting out. I don't really like to hold things overnight or over long periods of time, especially when I don't know where the markets are going. And today, of course, it's nothing to see a swing of several dollars. Several weeks ago, it'd be nothing to see a $10, $15 swing. This is insane. But find a strategy that works for you and then tweak it. All right. Find something you're really happy with and think about it before you just jump in. Oh, that looks good, because not every strategy is going to necessarily work for you. For example, if you are working still during the day and you don't have the ability to watch the markets all day, well, maybe something that's going to require you to watch the markets all day isn't really for you, but you might be able to get into something where you can buy it at the beginning of the day, put it up for sale, walk away and come back later, and it's there. And by the way, we have that. It's called the pick of the day. We email you a particular option that you buy at market open. It's kind of anchored in time. And then you simply put it up for sale, and then you can go on with the rest of your day and come back later, and the money's in your account usually. I was going to go back to something else I was just touched on earlier. Another reason not to follow people, not just me or anybody. Okay, don't follow anybody. Become the expert. But here's why: everybody is different. Everybody is going to have different risk tolerances. Where I might be okay with the risk of, say, okay, I'll risk $5,000 or $10,000 on this particular trade. You might think that's a little rich, right? You might think I only want to risk 2,000. That's going to make a difference to your trading. We all have different capitalizations. I might be, I might have, a $50,000 limit as to what I'm going to invest in my trading account, and you might come and say, well, I've got $250,000, so I can afford to go a deeper into the market than you, and so why am I following you, Hugh, when I could go, a little bit deeper? We also have different perspectives on the market. I can see the market in the coming moments as going up, whereas somebody else is saying it's going down. Let me give you an example. It happens all the time. I have this thing called the inner circle. What it is every morning around 9 o'clock, I send out an email as to the way I see the market unfolding for the rest of the day. Now, so often the market comes down. It comes down in pre-market. And then here I am saying I'm expecting to buy calls, expecting the market to go up, so I'm going to get into some calls. And people email me, say, Hugh, it's going down. And I email them back, say, okay, well, first of all, I got a moment, so I'm going to respond to you. But normally I won't respond until later in the day. But I don't care where it is now or where it has been necessarily as much as where it's going to go. To me, it's the future that's important right now, not the past. And I see the market basing is going to bounce around, then it's going to go back up based on blah, blah, blah. And that's why I believe the market is going to go up. And it's really nice when I'm right so many times with that, and then they say to me later, how'd you know that? How'd you know that? I said, well, come in and take the course and I'll show you. But learn the strategy that fits your style, your goals. Okay, our goals are going to be different. My goal is going to be different today than it was, even a year ago. My goal is different. I might not need to make 20 or 30 or 50% a day or something. I might be content with making 5 or 6%. Accepting that long-term success is a process. This is really important. All right, you got to understand that a lot of people they think that they're just going to get in and they're going to pick up an ebook or a video, and all of a sudden they're going to become an expert trader in option. That's not the way it works. As I mentioned earlier, it's not a straight line. It's actually zigzagging up and down, and somebody's going to go really down a lot before you kind of learn certain lessons. But the longer you stay engaged with the program, the better trader you're going to be, okay? Find the style, find the people that are going to help you, and then, tweak it as needed, but give it the time. And then I'm talking here maybe a year or 2 years. We have people in our program dating back to 2011, I think there's a couple of people going back to 2010. That's 9 or 10 years. They're still with us. They're still learning. They're still trading. They're trading with us because they're obviously having some success, right? So you want to do that, and you want to align with a competent, compassionate coach. I think this is really important, a mentor, somebody you're going to bounce off of, because I think that if you have the wrong coach, it could hurt you long-term, not just in your trading, but in your whole overall impression of this business. Let me give you an example here. I took flying lessons many years ago, and in a neighboring flying school at a neighboring airport, they had an instructor who was really arrogant, condescending, and he made his students feel very small. And a lot of those students, they didn't really know a whole lot. I mean, they were there to learn, obviously, right? But we used to get complaints from buddies. You'd kind of get together with people and say, oh, so-and-so, he's horrible. And I even know of 2 or 3 people who just kind of left the whole flying hobby because they didn't like their instructor. And I remember telling these guys, well, listen, don't let that influence your whole outlook on flying because you had a bad instructor. The guy's an idiot. Okay, come over to our flying school. We got some pretty cool instructors, and they're not going to treat you like that. And there's no sense in you sacrificing your entire amazing hobby that so few people in the world can actually enjoy because you had this bad experience. And if they come over, and then of course they would, and then they got their lessons and their licenses and everything else. So they're very thankful for that. And that's what I'm saying. If you find yourself with somebody that you're not getting along with, they're not satisfying your needs, right? Maybe they're going in one direction and you need to go in another direction. You need a coach that's actually going to go with you in the direction that you need to go. And for example, when I mentor somebody, one of the things I like to do is I like to talk to them first. Don't just sign up for something. I want to know, who are you? What are your goals? Your goals could be different than mine. I got one guy, he's trying to make a lot of money because he's got huge bills to pay. Another guy's just saying, listen, I'm just kind of setting up for retirement in 3 or 4 years, and I want to learn just nice and gradually. I don't want to, I don't want to get too heavy because I'm still working. So I'm going to direct them in a different way, right? And I'm not looking to extract money from the guy who's going to just take it up easy, nice and slow. I'm going to say, okay, let's start with this. Start with the inner circle. Doesn't cost you much. You're going to get your feet wet, and it's going to be really pretty cool. So that's what you want to do. You want to align yourself with somebody and talk to them first. Talk to them. And in fact, email them with a question. See how long it takes them to respond. Because if they respond fairly quickly without you even giving them any money, then that's a sign that he's probably a pretty good coach, because they're not interested in the money as much as kind of making sure that you're okay with your answers, right? And be willing to pay for that coaching. That's the other thing I want to mention to you. Whatever they feel is worth their cost, they're probably worth it. All right, so don't kind of try to negotiate that, because they don't like that. Make sure that you give them what's fair to them and due to them, and then stay with the program. You need to stay with the program, because you'll find that over time, and tweak it as necessary, make the program kind of work for you, make it fit, but you're going to actually do very well. For example, that example that I gave you earlier, to make 85% plus time it works for 6% gain. And we have programs that make 95 or 98% and plus. There's obviously information that you're not seeing yet in that, but when you join the inner circle, you're going to get all that information. You say, wow, this thing is unbelievable. This is unbelievable. How can this happen consistently over and over and over and over again? And that's what it is. So when I say tweak, find out those little nuances. And even if you come from a background that you think you know everything, well, maybe you don't, but why would you be here if you do, right? So be open to certain things that just might work better than what you're sort of understanding right now. Trading can be very lonely, folks. I don't think I have to tell you that. A lot of people are definitely trading by themselves. And one of the things that I kind of want to instill is that even though you're trading by yourself, I don't want you to feel that you're alone if you have the support of a coach. And I can tell you, for example, with us, if you email us, we'd like to get back to you at a certain reasonable time with your answers. So would you like to see a strategy that delivers 98% plus success? And I'm talking about success measured as 6% or more. If the answer is yes, I do want you to join the Winner's Circle trading room daily, 9:20 till about 10 o'clock. Now, there is a cost to this. It's $99 a week. And you can expect to be in the trading room for 1 or 2, 3, 4 weeks. And you're going to gain a lot of great information. Be forewarned, though, that most people who actually come into this, they end up staying for a very long time, because they're really making a lot of money. They're enjoying it. They're getting information, inspiration. They're getting engagement. And a lot of people say it's even entertaining, because they actually like to have a lot of fun. This $99 a week, the Winner's Circle trading room, by the way, includes our expiration day trading room sessions. These are every other Friday at 3:30 we get together, and it's actually really pretty cool. And folks, if you're undecided, why not book a free 15-minute one-on-one session with me to find out more? Just go to our website, daytradespy.com, and then you're going to be able to scroll down, and you'll see a button for my calendar. Go ahead and book a one-on-one with me. I'd be really happy to talk to you and see where the next level takes you with your trading career. Okay, so I hope you got something out of this, folks. I'm going to thank you all. And I'm not sure we have a lot of time for questions. Maybe we can take one question here, not really sure. There's a question there about, well, wait a second, you make 6%, so a loss can wipe you out. Yes, it can, but I'm going to tell you, we repair our trades. First of all, the trades we get into, they're pretty assured of getting it. But if we do get into a bad trade, we have ways of repairing them. So we never let our trades go to zero. Okay, we do not let our trades go to zero. You'll find that our trades are actually working out a lot more than they don't. And net, you're going to do very, very well. I think we're kind of out of time here. So, Ann, I'm gonna leave this with you. And if you have any questions, ladies and gentlemen, go to our website. There's a contact us. Fire off an email. We'll get back to you. Thank you all so much for being here. Thank you, Anna.
And I'm going to turn my camera on so I can scare everybody. Hopefully it'll just be a little bit more engaging. It should come up in a minute. There we go. So can everyone see and hear me okay? I just always want to do a quick check on that. I'm going to pull up the question panel here. And we're going to go ahead and get started. I appreciate everybody chiming in. And what did I just do here? Excuse me one second. That's what I wanted. My own quality control. All right, so once again, I appreciate everyone being here, and big points that I want you guys to be able to take away. And again, we should just remind everyone to keep the FTC happy. Trading futures, options on futures, and retail off exchange foreign currency transactions involve substantial risk for loss, not suitable for all investors. Past performance not indicative of future results. All right, so our ability to see our weaknesses is our biggest strength, and securing the objectivity to see those weaknesses is our biggest challenge. If you've been around trading any time at all, you understand the toughest part is to wait for the market to align with strategy and then execute as intended. And we have the energy to do that when we trust ourselves. And that trust comes from a tangible understanding for how we've put ourselves in the best position to anticipate, take advantage of price movement. And we get there by being able to see our weaknesses, to see and fill the gaps. And the sooner we see the gap, the better we fill it. We keep improving faster and faster. We become that much more targeted in our effort, have that much higher sensitivity for preparedness to direct self-improvement. And I know this is common sense stuff, but most folks that come to trading, they're thinking about their strategy or their tools, or if their computer's fast enough, or if they're using the right trading platform. They're not thinking about what's most important, and that's sensitivity for our awareness, our ability to see and fill the gaps. We have to have the objectivity, or another way to think of it is the humility to be able to do that. And so that's got to be our top objective. And when we understand a process that's going to allow us to achieve that most effectively, then we'll really start to get the outcomes we desire. Remember, people that come to trading, they've been successful in other things. That's how you've accumulated the capital and the confidence to come and do this. So it's not a question of being willing to put in the time and do the work. The breakdown comes when then that time and effort isn't rewarded. And if we're not targeted, if we're not focused, if we don't have sensitivity for our preparedness, then we're going to be ineffective. We're not going to have the awareness to stay ahead of price to make the decisions that allow us to be profitable. And unfortunately, there's a learning gap that has been engineered into us that most people aren't even aware of. And that engineering is just a product of higher education, professional training, and organizational development, overweighting functional instruction at the expense of strengthening foundational behaviors that cause this, our brain, to filter, process, and apply information most effectively. This is the key, not the computer. Computer's a tool. We have to be very clear here so we know how to use the computer, the software, most effectively. But again, folks get the cart before the horse. They're looking at the software and all the functional stuff instead of understanding how fast this is filtering, processing, and applying information so we have the clarity to apply our tools. And the way that clarity comes is we see and fill the gaps in our own knowledge and competency, because that gets us the awareness to apply the tools, adjust the tools most effectively. So that functional professional behavior we're going to go through. In other words, we'll run through a quick batting order, but the stuff at the bare minimum you guys need to be doing at the functional level. That'll just give you a baseline to evaluate the rest of the presentation from. Then what we're really going to get into are the foundational behaviors that have not been developed anywhere near the level that they need to. I'm going to talk about brain function at 30,000 feet so you guys understand how much more you're capable of, how achievable it is, and why this is the best place to put your time and effort to gain the greatest improvement. And then we're going to detail high intuitive function. I call it the science of excellence. This is going to begin to give us a tangible understanding for how we're best directing and supporting improvement in performance. Again, when we know we're doing the right things, right? Dotting the I's, cross the T's, anxiety goes way down, energy goes way up. We don't doubt ourselves. Every step we take, we're trusting ourselves more. We have that much more energy. We become that much more aware. We have that objectivity to see and fill the gaps. We keep increasing our knowledge and competency, have that high awareness to stay ahead of price. Then I'm going to finish up with some next steps that you can take. So these are the basic components that are an absolute necessity that we have to strive for mastery over at the functional level. We have to have a strategy that gives us an advantage against other market competitors. We've got to have the analytical ability to quantify and qualify it. We have to have a proprietary advantage, something that gives us the edge, because a lot of folks are going to be using a similar strategy. So what's our proprietary advantage? And then the other thing that often gets overlooked, but it has been huge over the last 5 months, since we started selling off, really 4 months, February 20th, but it's understanding the fundamentals that hold that potential to impact price. We need to make sure they're accounted for, we understand. And then we have to have a process of ensuring these methods that collectively secure intelligent risk are being consistently applied. And again, this is probably the second hardest thing. You know, we believe that we have all of the above: strategy, analytic ability, proprietary advantage, or have an eye on the fundamentals. But we're all over the map. We have it good one day, not so good the other. And we can't see where we're falling off. We can't see those opportunities to improve. So the slides that I'm going to share with you here are from March 26th. That was the last time, I believe that was the date that I presented for InvestorExpos with Anna. And I'm just going to go through these so you can appreciate what a solid process does. So I'm going to actually take myself out of the picture here for a minute. You know, we have been selling off hard since the 20th when I came in, and I wanted to provide perspective for recovery. And so the first thing we were looking for was a bottom, and one of the first tells would be a close above the previous day's high. And so you see that happening here. And then the next thing we were looking for was something would tell us, are we getting a bottoming or a retracement? And I said, well, if we get a close candle body back above the 618 retracement, that's a pretty good sign that this is not a pullback, that this is a bottoming. And we see what happened when we got that. And that area happened to correlate with a bunch of key exponential moving averages. And then I said the next validation is if we get candle bodies above the top of the daily cloud. And we got that. Then I said the next thing we'd be looking for would be the 50-day getting back above the 100-day. That actually happened, I believe, Monday of this week. The next thing I said, hey, if we get the trailing Shiku back out above the top of the cloud, that's going to key us into acceleration higher. Well, this lags by 26 periods. So it came out here, and that brought acceleration. So the point I'm trying to make is go back to March 26th. Because of my process, I knew everything that I was looking for that would validate a bottom, be able to differentiate between a retracement or the market recovery. And my experience said, hey, expect 4 to 8 weeks of consolidation, building the bottom, this validation process. That's pretty much what it came out to. And so the other thing that was a big part of this was my ability to go through the fundamentals, understand what was different now between 2008. In other words, we've restructured the economy, or I should say the administration's restructured the economy over the last 41, 42 months in a huge way. And I'm at a little bit more advantage than most. I started out life as a CPA, so I have a very deep, strong accounting background. Plus, I've been doing this since 1983 for the market, so I've seen the world come to an end in '87, the bursting of the bubble in 2000, 9/11 in 2001, and then 2008, the meltdown. So this is the 5th rodeo for me. So I know things will come back, and it's just, for me, my starting point was, hey, how does this differ from the other earth-ending events, if you will? And so that's what allowed me to share this perspective. But again, Tax Cut and Job Act, regulation clawback, bringing energy independence, what we've done with foreign policy, fair trade, border security, and then the Fed cuts that were already happening to undo the unnecessary cuts from 2019. And then expectations for continued improvement on healthcare reform and infrastructure. That was all in play before we started the trigger. And then looking at these dominoes falling, it's like they wrote a script. And I took everyone through that back on the 26th. But again, experience, perspective, not listening to the aligned media, but breaking it down and trying to make sense out of it. So the more I understood the script, and there were some other things, big anomaly between gold and the 10-year. Also, the NASDAQ usually is more of a drop than the ES. That didn't happen. So anyway, that made me think it was unsustainable. And so again, that was my objectivity that allowed me to see that. Then also look at the effects, down 31%. And then I looked at the treasuries, I looked at gold. You see the big discrepancy there between the treasuries gain and the gold loss. And usually they're hand in hand. And that was just a huge flashing red flag that, hey, something doesn't make sense here. And if you look at the volume in gold, there's a pretty good tell that they were selling gold to finance the attack on the market. And then just understanding the stimulus, how it was taken control by the Treasury through special vehicle programs, meaning the Fed wasn't going to be able to jack with it, how it's going to small business and individuals instead of banks and governments. Huge difference. And the other thing that you're going to see happen is we're going to have more and more small business loans, but that's going to be at 1 to 1.5% run through the Treasury, Small Business Association or administration. The U.S. taxpayer is going to become the greatest angel investor in history. And then the other thing that's coming out more and more is an understanding for this pandemic, its cause, how treatable it is, how mismanaged it's been. So the outcome is really affects less than 95% of the workforce. The 5% that are affected, they can continue to work from home. Worst thing that happens hydroxychloroquine with erythromycin and zinc. We knew this was a great cure 45 days ago. The press has done everything they could to mislead, to the point Lancet had to retract a very terrible study with zero efficacy. So anyway, that's where we're at. And I expect, again, this recovery just to continue to accelerate quickly. But the big point I want to make is that I had the awareness to go through this because of my process. That process gave me great objectivity. And that objectivity over the years has allowed me to keep seeing and filling the gaps in my own knowledge and competency, giving me a tangible understanding for personal accountability. And so my focus is always to have the high awareness to follow rules and complete tasks most effectively. Unfortunately, most people are conditioned to just following rules and completing tasks. They can't get to that high awareness that changes everything. The ability to have that high awareness to follow rules and complete tasks most effectively. Where does that come from? The objectivity to see and fill the gaps. And please know this, as change accelerates, what happens? There's more information and events, more variables, more risk for gaps. So the reality of it is, the more change accelerates, and we're on the cusp of another huge acceleration with 5G speeding up 4G internet speed by 100 times to power the Internet of Things. There's going to be a massive increase to information and events. That's what happens. So wherever we're at now in our ability to see and fill gaps, we're going to have to get way, way better, because there's going to be this exponential increase to information and events that's got to get through here. So that process, when we know the behaviors that cause us to see and fill the gaps most effectively, giving us that tangible understanding for accountability, that's speeding up the rate of improvement with the brain so it can keep up with this ever increasing volume and speed of information and events. And so the behaviors that strengthen the brain, or I should say the behaviors that we want to strengthen that cause the brain to filter, process, and apply information most effectively, well, that's accomplished by learning how to develop and support high intuitive function. And I'm going to take you through that. But what I wanted to do was just go back to what I said a little over 2 months ago, take you through the process, my strategy, my analytical ability, my proprietary tools, and also my process for understanding the fundamentals and my analytical ability, and how, when all that comes together, how we're able to project out a future vision tightly aligned with events as they occur. We see details in high def, making precise adjustments, securing outcomes desired. In other words, we don't have anxiety over what's going on. We have high awareness to project an expectation. And then we're constantly looking at the data to validate that expectation. And that process is helping to understand, giving us more awareness. We see things in greater detail. We keep making better adjustments. But that whole level of development is left out, and we're told to focus on strategy, told to focus on our analytical ability to quantify and qualify strategy, told that we need a proprietary advantage, told that we need to understand the fundamentals, and that we need a process. And I have a training that does all of this. But the most valuable training I have is the one that builds the foundation that secures that objectivity, so we have the awareness, the ability to see and fill the gaps. And that's the greatest opportunity for improvement. So again, this learning gap is devastating. This is why most people fail. And again, it's created by overweighting functional instruction at the expense of strengthening foundational behaviors that cause the brain to filter, process, and apply information most effectively. Again, those behaviors should be at the tip of our tongue, but they're not. Why? Thought leaders just didn't know to teach them. Why? They didn't have the benefit of long-term immersion in a hyperdynamic environment. I spent over 20 years trading in the S&P 500. Went through some of the most volatile trading conditions in history. Black Monday, October 19th, 1987. Run up and bursting of the bubble, 9/11. And so going through those, experiencing your own behavior, observing the behavior of others to discern who to trust, created great insights for this gap. In other words, what I had to do personally to increase knowledge and competency to survive, to stay ahead of price in that crazy environment. So one of the big reasons that this gap, we're so blind to it, is bias. Bias influences how we perceive, comprehend, and project information. The more biased we are, the greater disadvantage we're at in our ability to filter, process, and apply. So that bias determines the magnitude of development and performance risk, and that's defined by 3 blind spots. First blind spot's the difference between what we believe we know and the actual depth of our knowledge. Confucius and Socrates both wrote, the wiser a man becomes, the more he knows that he doesn't know. Hallmark of a genuine professional is understanding there's always something to fix, starting with themselves. Why? Because as technology advances, it increases the volume and speed of information and events. More variables, more gaps. Change accelerates. So we're always going to have a gap to fill to develop the knowledge and competency that we need to continue to have competitive advantage as the volume and speed of information and events, variables and gaps keeps increasing. Second blind spot, difference between how we perceive our behavior and the reality of our conduct. We may believe we're doing the right things. We have a good strategy. We understand the strategy. We're waiting and executing. But when then we look at our P&L, we'll beat ourselves up because we didn't wait and we didn't execute. And so we think that's the problem. I got to wait more. I got to execute better. We don't understand the root cause of the problem is having greater awareness for those gaps that are keeping us from having the trust, the patience to wait, the conviction to execute as intended. We're stuck here at the functional level. And then the last is our inability to know how our behavior impacts the efforts of others. Think of life as one big energy equation. If I do good things, I have positive experiences, I have higher energy. If I miss opportunity to do good things or believe I'm doing good things and I'm not, there's consequences, I'm going to have lower energy. When we come to trading, we want to have as high energy as we can. That gives us the patience to wait. So don't think for a moment that the stuff you do outside of trading doesn't impact your effectiveness as a trader. We want to keep anxiety down, energy high in everything that we do. So getting back to bias, our environment forms and confirms our bias, right? Our family, where we went to school, our community, our education, our profession, our clients, our industry, all that forms and confirms our bias. And most folks are trapped in an echo chamber because instinct, and we're going to talk about this more in a minute, it is a survival mechanism. Instincts are unconscious behaviors shared by a species necessary to its survival. So instinct will have us do things to keep us safe. And unfortunately, change is accelerating so fast that those instincts now are doing more harm than good. And I don't have time to go through all of that in great detail right now, but I'm sure if you give it a little bit of thought, it's just a math problem. More information and events has to go through here to know who, what, and when to trust, not a computer. More variables and gaps, higher the probability we're going to feel threatened. And what do we do when we're threatened? We turtle. We're not out here looking to see and fill the gaps. And so most folks have no idea the degree, the effort that's put in to manipulate, to disorientate, confuse, overwhelm, setting folks up to be deceived, manipulated, and exploited. And what's the target? To get us to buy products and services and adopt political and social beliefs. That's, how media makes their money. And so the controlling powers, they certainly understand human nature. They have deep understanding for the power and construction of trust. They understand how we're trapped in this echo chamber. And they keep us in there because when we have low awareness, we're much easier to control. That institutional bias, again, instinctive. When you're a leader, when you have power, the income and wealth that goes with it, you instinctively protect it. How do you protect it? Well, you resist change because none of us ever understand change and all the variables anywhere near we believe we will. And so that's a threat. If we don't understand them, we can't account for them all, we may lose our power. And so that's why leadership is very resistant to change. It's instinctive. They're protecting themselves. And then junior management, what do they want to do? They want to be leaders. How do you get to be a leader? Well, you mimic leadership's values because you'll be accepted, you'll be trusted, you'll be invited into the club. So again, the awareness that's absolutely essential to competitive standing keeps getting repressed. And we're at a point now, especially with 5G increasing 4G internet by 100 times to power the Internet of Things, tens of thousands of additional unique user data points. Folks really can't even begin to comprehend the risk they're at right now for this exponential increase to information and events, and it's happening now. So let's talk about the brain. The brain is how we discern trust. And why don't we have this clarity for how important this is? We just take it for granted. In other words, someone talks about, well, the brain really is, everything. Yeah, I know it. I'm not stupid, right? Well, if our understanding for the power and construction of trust, which determines this, there'd be no conflict, right? In other words, I'd ask a question, you'd be happy to answer it. You ask me a question, I'd be happy to answer it. If I help you out, bring you knowledge or the same, we're happy to accept it. In other words, we trust each other. We're not thinking that we're going to be deceived, manipulated, or exploited. And so what everyone's doing their absolute best to transfer knowledge and flow information, right? Help each other out. We keep realizing and expanding our collective strengths, our potential. And when we understand that the transparency for our character and commitment that is created by helping each other out, that's what we're all doing. We're racing to help each other out. And so think about it. Where does happiness come from? We're successful, professional, personal fulfillment, right? Joy and happiness. And when we figure out the beliefs and behaviors that get us that by securing our objectivity, so we have the ability to see and fill the gaps, everything changes. But unfortunately, those are rare moments. That's not consistently experienced, that euphoria. More often than not, we have certain levels of frustration and anxiety and stress that keep us from seeing and filling the gaps. We can't stay ahead of price. So, figuring out the direction the market's going to move in is the easy part. Today, for example, we've had a little over a week of the market moving up, up, up. So we've been on a lookout for a close below the previous day's low to tell us the market's ready to retrace. That happened in the ES last night. Stage was set for the market to retrace, and that's what it's doing. So again, direction isn't hard to figure out. The hard part is waiting for the market to trigger and then executing as intended. The more anxiety we experience, the harder it is to wait and execute. In other words, if you weren't waiting for that confirmation close below the previous day's low to validate retracement, you probably got chopped up pretty good over the last couple of days if you were trying to sell the market, pick a top. So lack of conviction for who, what, and when to trust, starting with ourselves, that's where that anxiety comes from, right? Our brain's working overtime to try and connect the dots because we don't have that conviction. So we want to keep anxiety down, energy high. How do we do that? We have that tangible understanding for how we're best directing and supporting improvement and performance, how we have that ability to see and fill the gaps, how we've secured the objectivity that gives us that power. So we want that tangible understanding. But again, we keep getting pushed towards the functional stuff, strategy, analysis, proprietary advantage, fundamentals, instead of that foundational stuff, those beliefs and behaviors that are going to allow us to trust ourselves, filter, process, and apply information fast enough to stay ahead of price. And again, when we get that foundational understanding, our focus shifts from following rules and completing tasks to achieving the high awareness to follow rules and complete tasks most effectively. Can everyone appreciate that maybe subtle but big, big difference? When our focus shifts from following rules and completing tasks to achieving the high awareness to follow rules and complete tasks most effectively. And again, just ask yourself where your focus is. So again, it's likely to be on all the functional stuff, strategy, analytical ability, proprietary advantage, fundamentals, process, instead of the foundational stuff. So the brain is the only mechanism capable of integrating the mind, heart, and gut to know who, what, when to trust. So got all this information and events, the greater volatility in the market, the more the information, still got to go through here, not the computer. And trust determines how fast that's going to happen, how fast we'll filter, process, and apply information. So we got all of this coming, and this isn't keeping up. And then we're actually eroding, trusting ourselves less and less. That erosion's proportionate to the increase that we can't keep up with. And remember, we also have variables and gaps increasing proportionately. So it's not a good place. So that's the gap we have to fill. Again, overweighting functional instruction at the expense of strengthening foundational behaviors, causing the brain to filter, process, and apply information most effectively. So we've got to develop the behaviors that give us the awareness to see and fill the gaps for our knowledge and competency at the functional level. So I want to talk about high intuitive function here for a few minutes, and then we'll start wrapping it up. So we need to understand the difference between intuitive function and instinctive behavior. Let's start by acknowledging that intuitive function is proactive behavior. It's increasing our knowledge and improving our competency by seeing and filling gaps. That's proactive behavior. And we're also seeking out opportunities to assist others, and as traders, that focus is staying ahead of price movement. Again, proactive behavior. And it's that proactive behavior, seeing and filling gaps, knowing our objective is to stay ahead of price, that keeps us precisely targeted in our effort and high sensitivity for preparedness. We keep seeing and filling the gaps at the functional level. Instinctive behavior is unconscious behavior shared by a species necessary to its survival. Again, go back to that bias. We go back to that desire to persevere, to survive. And that overrides the awareness we need to persevere and survive as change accelerates. And we've got to fix that defect. We have to stay conscious to that risk. That's how we fix that defect. More importantly, it's how it's going to get us the outcomes we desire as a trader. Again, instinctive behavior, reactive behavior that's coded into our DNA. The desire to compete and survive is instinctive, but intuitive function determines how successful we are. Again, proactive behavior, creativity and imagination, integrating skill, knowledge, and experience to project that future vision, tightly align with events as they occur, allow us to see details in high definition, make precise adjustments, securing outcomes desired. So when we get that knowledge to develop and support high intuitive function, then accountability becomes tangible. We have that dot the I, cross the T understanding for how we're best directing and supporting improvement and performance. And that's superior to the abstract concept of personal accountability. And so when we have that, draw straight lines to how we're targeting, how we have that high sensitivity for preparedness, then we're going to have strong conviction that allows us to trust ourselves, the patience to wait for the market, the conviction to execute as intended. And again, that trust determines how fast the brain's going to get through information. The more we trust ourselves, faster this works, higher the probability. We'll see and fill the gaps. We'll have that clarity and focus, projecting a future vision tightly aligned with future events. So we've got to be proactive. Higher intuitive function is, the more proactive we'll be. The more we understand, how to develop and support high intuitive function, the more targeted in our efforts, the more sensitive we'll be. We'll have that superior awareness that's going to allow us to follow rules and complete tasks most effectively. And again, it all comes together because that great clarity and focus, that high energy to be out here thinking independently, seeing and filling gaps, each time higher and higher, greater awareness, projecting expectations tightly aligned with events as they occur, see details in high depth, make precise adjustments, securing outcomes desired. Think about an athlete after a great game, they're being interviewed. Hey, what was it like out there? You know, it was so peaceful. It's like I saw everything in slow motion. I had all the time to make the play. Well, high intuitive function, projecting expectations tightly aligned with events as they occur, allowing details to be viewed in high depth, precise adjustments, securing outcomes desired. So high intuitive function triggers peak performance. Think about this. We've all had those experiences where we've nailed it, saw things in slow motion, right? All the time to make the play. We couldn't wait to do it again, but we're frustrated because we couldn't repeat it. But when we know how to develop and support high intuitive function, guess what? Peak performance becomes repeatable. Everything changes. Especially the acceleration of improvement, because peak performance is accessing, realizing, amplifying our potential, driving unconscious, continuous, and accelerating improvement, because it keeps pushing us into the brain's unlimited performance horizon. That success, joy, and happiness, higher energy, we keep seeing the next gap sooner and filling it more effectively, keep seeing the next opportunity sooner, making more out of it. So next steps. We want to learn how to develop and support high intuitive function. That's a game changer. That's going to fill the gap. It's not only going to make you a better trader, it's going to make you better at everything that you do. And especially with 5G, increasing 4G internet by 100x to power the Internet of Things, this exponential, you need to increase brain function. So learn how to develop and support high intuitive function. You're going to have that ability to see and fill gaps most effectively. You'll fill the gap. So if you're not solid on the functional stuff, you know, I can help you with that. And I have advanced training that does that. And it's all explained in the store. It's $145 a month. So you come in, you get everything, you get all the training, you're with me in the briefing every morning, you get the chart book every night, you're with the Sunday evening review. I'm with my clients 6 out of 7 days a week. I answer emails pretty quick. So you can come in, you can try it for a month, you can learn a strategy, you can really sharpen up your analytical skills, you're going to gain my proprietary advantages. I teach my proprietary value level calculation and also my fundamentals, my process for the fundamentals. So if you go to this trustfirst.com store and sign in, you can click advanced training. It goes through the 9 learning modules and more importantly, the briefing, the chart book, the Sunday evening review. But I think everybody needs to fill the gap. Again, this is going to make you better at everything that you do. Highly targeted, precisely targeted, highly sensitive. So I've just created a new product. It's called the Accelerator Workshop. It's 90 minutes on demand. And again, you go to the store, you can read everything that's in there. It's 75 bucks. You can use this coupon code INEXPO10, all caps, and that'll reduce your cost to $65. And that is going to give you some tools that are going to immediately improve your performance, get you started on filling the gap. There's an accelerator challenge in there that gives you objectives at 30, 60, 90 days out. You start on that, you won't believe where you're at by the time Labor Day comes around. So that's everything I have. I've got some time for questions, but we're waiting for Anna to come in. You know, again, it is all about having the awareness to see and fill the gaps, direct and support our own improvement. And unfortunately, we haven't been given this knowledge. We weren't given it in higher education. We weren't given it in professional training and organizational development. And it never fails. Folks that go through my training, the comments are always the same. How come nobody didn't tell me this before? And, you know, the greatest validation has come from folks in the intelligence community, law enforcement, military, who I've had the pleasure of training. And especially in the military and intelligence, they get the best of the best. Law enforcement gets great training too. They have to be in compliance with the law. But again, just that difference, what happens when focus goes from following rules and completing tasks to achieving the high awareness to follow rules and complete tasks most effectively. Yeah, there's more steps. The next step would be basic training, which really teaches the intuitive development process, the specific beliefs and behaviors, learn how to take apart, rebuild, add horsepower to, and then fine tune the cognitive engine that optimizes decision making and execution. But you know, very affordable. Use a coupon, workshop, $65, and meet the acceleration challenge. Again, it's all included. You'll be amazed how much better you are in everything by Labor Day. And if you're struggling with the functional stuff, your strategy, technical analysis, proprietary advantage, join us for advanced training for a month. It's only $145, and you get everything. And you know, get to step through it with us, and then if you like it, you continue. So Anna, are you there?
Yes, I'm here. Thank you so much, Ray. It was a great presentation.
Anna, I appreciate it, and thank you again for having me. Thank you to everyone for taking the time to listen. And again, the path to all of this, go to trust1st.com, click on store and sign in, and then you'll see the store that has the listing of your options.
Thanks so much to everyone who attended today's show. Don't miss our next event on June 18th. Follow us on Instagram to find out more about our upcoming events. This session was recorded, and recording will be sent to your email. Just in case if you didn't receive the recording, you can just simply go to YouTube, type into the search InvestorExpos, and here you will be able to find the video from today's show and the previous ones. Once again, thanks so much to everyone, and happy trading!